mention these. It's a 5D joystick, back button, record button, and then this little hole here is for binding. And then over here on this side is the USB-C port that only accesses the micro SD card. So if you don't want to take the micro SD card out all, popping in and out all the time, you just turn the goggles on, plug this into your computer via micro USB-C cable, and then you have access. That shows up as a USB drive. The other side over here, for the batteries, that's where you actually charge the battery here, and you can see we're at 2 out of 4 bars. And then the cable just plugs in on the side over here. You got 2 antennas. And this is the stuff that I really couldn't show you, but I'm gonna try and take the foam off of here and maybe the lens and see if we can't see the LCD or the OSD display a little bit more closely. So basically here you got your channel, and then you've got your voltage there, drone voltage, goggles voltage, real-time bit rate. That's all the stuff that's on the bottom. And then you have your distance, connection status, quadcopter SD card status, and then you have, this is kind of interesting, quadcopter SD card status. I'm not really sure. Maybe there's going to be a future version that'll have onboard recording. So it looks like, so I didn't even see that in the goggles. Maybe I just kind of overlooked it. But right now there's no onboard recording, but perhaps in a future version of this there will be. And then you have goggle SD card status there. And then it'll have a little red blinking light when you're recording. So I'm going to try and go over this in the actual goggles itself, but basically when you bring up the menu, you have your 3 channels. There's a race mode that actually opens up a whole bunch of other channels. So yeah, it's right here. It talks about that right here. So in the normal mode, you get 3 channels like this. And in the racing mode, you get 16 channels. So I suppose if you have more than 3 pilots, I think that's the scenario that you're going to want to switch this goggle into, then each of the channels will have its own section of the bandwidth there. So it's kind of varies all over the place, so I'm not going to read all that. You can pause the video if you'd like, but it looks like this is mainly going to be for racing situations. We have multiple pilots, more than 3, and here's the interface. It says like basically there's display, record set, device, camera system, and then you have your different ones here. So for display, this got stuff like brightness, focus mode, which I'm not really sure what that is. I think that's kind of like where it cuts off the sides. Not really sure what viewfinder is. We'll explore that here a little bit later. Auto record, loop recording, and basically stuff you want in terms of formatting the SD cards, all that, all the recording stuff. This is the device menu. And again, I'm going to try and show this in the goggles, but I'm just going to quickly show what it shows in the manual here. Here are the camera parameters. So it looks like you can adjust your EV, saturation, sharpness, white balance, etc. And then even noise reduction. And also there's a zoom function, which I think will decrease the field of view if you feel like it's too high. And here's the system menu. It's probably for firmware updates. I think you would probably just put the firmware on the micro SD card, stick it in there, and then you can initiate it from this menu here. This is the playback interface. If you have recordings, then you can play them back via this menu. Alright, so I'm going to try and take this foam padding off here. Just want to make a quick note regarding the fit and comfort for most people. I think that they try and make this as flexible as possible to make it as comfortable as possible. The one section that is not that comfortable is this middle nose section here. I've got a little bit bigger of a nose, so it puts some pressure on my nose here. It doesn't really bother me that much. I can fly a whole pack without really noticing it, but yeah, I do notice that when I initially put it on, the weight of the goggles just kind of sit on this section here. It's a little bit stiff, even though it is rubber. But they put this flap here so that it can accommodate smaller noses and not let light leak in. This is where the biggest source of complaint are for most people is the light leak from here. So if you have a bigger nose and you're wondering why it hurts a little bit, it's because there are people with smaller noses that they're trying to accommodate and they don't want them to complain about light leak. So you could thank them for the pain you're experiencing. So I think we can take this foam padding off. It's just connected via some Velcro, so go ahead and peel this off. All right, got the foam off, and you know, it kind of peels off some of the adhesive. It's very strong Velcro, stronger than the adhesive that holds the Velcro to the plastic. So you may need to kind of carefully watch to make sure you're not peeling the Velcro off of the plastic. And oh, just noticing that there's a piece of plastic here. Maybe my goggles will be a little bit more clear now that this plastic protection film is off. I didn't even know that was there. It didn't seem like it bothered me too much, but got some screws here. So in order to see this, because I try and show you the screen, it just does not show up on my camera at all. So let me take this lens off. So I think we're just gonna unscrew these. All right, I gotta take the little nose piece out. Got some clips right here, and there's one last screw right down here. All right, so now this should come off. Okay, great. Well, I was hoping this thing would pop off. I was wrong. Looks like there's just a clip there that's holding the lens in place. Let's see if I can pop it out. All right, so this just pops out. Pretty nice. And it's just basically a lens to help focus the screen. So put this aside, make sure don't scratch it. Now we can turn this on, and we should be able to see the screen. All right, so we got a nice screen there. Let's see if I can zoom in. So it looks like the actual screen is right there. It's at the top like this. It's actually horizontal. You can see that kind of make out the bottom of the OSD there. And then there's a series of mirrors, it looks like, so that it increases the focal length to give you that image. And it's still very hard to make out the OSD elements on the bottom, even if I zoom in. So let me see if I can zoom in some more. I'm going to plug in the VTX. So here is our image, and I'm going to bring up the menus. So press down the joystick. So there's the channels that you can select. Go down to settings. Again, the first one is display, and very small, even in my, yeah, I can zoom in a little bit there. That looks like it's in focus. So you can adjust your brightness. There's focus mode, so let me turn that on and see what happens. Let's go back out. It doesn't look like it changes anything on the stand and standby mode. So probably what happens is, well, I'll probably make a future video on that one. It's probably going to be when the signal gets low, it maintains the image quality in the center and degrades on the outside more. That's how focus mode works on DJI and Walksnail. You can adjust your OSD position here. Let's see. Okay, so that's you can see it's kind of moving there. That's the Betaflight OSD that I'm moving. So if you find that some of your elements are conflicting with the goggle OSD elements, you can move it like that. Let's go back out. Viewfinder, and then there's Viewfinder Edit. What is that? It must be that center box there. You can adjust the position of the viewfinder. I think that has to do with maybe the focus mode. So go back out. That's that center box there, so you can move it around. I'm going to turn that off. Go down to record set. So Again, I think in the future there's going to be goggles and then probably onboard recording in a future VTX, but not on this current one. Auto recording, recording loop. You can format your SD card here and also the record time for your loop recording. On the device, power level is at 200 milliwatts, that's the max. You can reduce it to 100 or 25. So if you have restrictions on your power level, you can adjust that there. Got your bit rate, and I think I changed this. I think it was set to 16 megabits, and I did change it to 24 megabits, but it doesn't seem like it goes any higher than at least on this VTX. So I think a future VTX might have a higher bit rate, and that's why that's there. But it looks like you can go down to 16, and then there's 8, and I think 8's the lowest. 8, 16, or 24 is what you got. Got your low battery alarm for the goggles. Right now you have mode is standard. There's race. So that's if you change it to race, you get those extra channels. So I think it's going to reboot. Okay, so rebooted. And there we go. Now we have 16 channels available to us. It looks like it defaulted to channel 6. I'm going to switch this back to standard mode. And some of the settings, you have standby mode, which basically goes to low power mode when you're unarmed, which is what you want. Got your buzzer level there, LED switch, goggles icon, I'm not really sure what that is. Language, and then you have your temperature right here. I did turn that on, that was off by default. If you go back out, and yeah, you can't really see it. It's over on the right hand side. It shows you the temperature of the goggles and temperature of the air unit. Yeah, that's too tiny. So my biggest complaint is these OSD elements are just way too small. And I can't even show to you when I've disassembled the goggles like this. It's kind of unfortunate. Alright, so the last menu is the camera menu, and here you can adjust things like your EV, saturation, sharpness, all these things. If you don't like what you see, you can adjust that. But for the zoom level, let's see if I take it down to 70%. Looks the same. Oh, nope, it changed. It's a little slow. Oh, now you can see the temperature and the VTX temperature and the goggle temperature. They're over in the upper right-hand corner. And again, I'll try and zoom in here, but yeah, it's not going to work. It's just too tiny. Can I get that to show? Yeah, it's just way too small. You can see it in the goggles, but it's just too small to see in through the camera here. But yeah, basically it doesn't change the field of view. It looks the same. It just changes the size of the image, of the transmitted image in the goggles on the screen. So I don't like that. I'm going to go back to 100%. There we go, much better. And you can change other things like your ratio. So I think you can go to 4:3, but all that does is just cuts off the right and the left, but the vertical field of view is the same, so that seems kind of pointless to me. I think this camera is a 16:9 camera, so we're just gonna get the full field of view like that. I think that's better. All right, so we exit out of that, and then this last menu is your system menu for doing your firmware updates. And then the playback menu for any recordings here, they will show up here and you can play them back via this menu, and then you have the toggle there for turning the OSD element on or off. So that's pretty much all of the menu items and the goggles themselves. If you guys want to see a full teardown of this, let me know. It doesn't look like it's going to be too difficult to take it out. I think you just take this board out and then this lens box out. And it looks like you have your SED antennas there. I think there's probably just 2 antennas. But yeah, not really much to this. But that's going to conclude this video. Just a little bit of a deeper dive into the goggles, because some people asked me a lot of questions about that. Hopefully that answered some of your questions about the goggles. Questions, comments, let me know in the comment section below, and I'll talk to you guys in the next video.
Morning everyone. So today I'll be modifying the Nathan Loop Squad, the Happy Model baseline, and I'm gonna be adding the HD0 Whoop Light VTX to this. First up, you gotta remember that this baseline comes with the X12 Lite controller, and this is 1 to 2S capable. Hence, this Nathan Loop Squad is a 2S 85mm micro. So what I'm gonna do is I'm gonna add the HD0 Whoop Light VTX onto this Happy Model baseline. But first and foremost, you got to disable the onboard VTX, and you got to desolder this particular patch right here. That's the one that's just below the IPEX connector. And once that is disabled, you can fit in the Whoop Light VTX or use any external VTX for that matter. So once that is done, you're all set to go. Alright, so I gotta have my morning coffee. The weather is good. Sun is out for a while. It's a little cloudy, but at least you can see the blue skies. That hits a spot. So the baseline is all fixed up, right? And with the HD0 system, this is the baseline for Nathan Loops. So today we got this guy. What's that? The Crashy Crash guy. Morning. And he's flying the what's that, remix? Remix.
The remix, OEM remix, and
The classic
Taken, and the classic Turbo V 120 RS, and the Year of the Rabbit, Diable Rabbit GTR 232, 236, I think.
Yeah. Quad from 4 years ago. Still a classic.
But with new digital setup. Power!
Hope you enjoyed this video. Check this out. today's video. Thank you all for watching, and see you guys again soon. Ciao.
This is the Crux 35 HD0, and what's really cool about it is this is a sub 250 gram quad with the 1 watt VTX on it that has the 90 FPS camera. So what I think is really cool about this combination is we can fly in a lot of places that are kind of outflying the range of the quad itself, and the video is holding in there, and you got the 90 FPS for super low latency for that locked in feel. And even with an action camera on this, it is well under 250 grams. It's about 200 grams with a Thumb Pro and a relatively large 4S battery. So give you a tour of this real quick. It's got the Freestyle V2 VTX on top, and then an antenna in the back, and then the Nano 90 camera in the front. And then there's an AIO on the bottom, 20 by 20, that runs these Happy Model 1404 3500 kV motors, and then 3.5-inch HQ props. This is a great thing to grab if you're looking for sub 250 with good range on HD0. Let's take a look at how it looks in video. Alright, right into the flight footage with this, because I really want to show what this thing can do. For me, it flies so great. It's very agile. I can fly
will eliminate or reduce tariffs on 99.5%. We should say that that figure is a little bit misleading because it is certainly going to reduce some of them and remove some of them. But again, when you're reducing barriers from 150%, that does not necessarily eliminate them. The EU claims that it's going to double EU good exports to India by 2032. And I'll just go through a sort of snapshot of some of the things as targets for the Europeans. So car tariffs are at about 110% at their highest level. Those can go as low as 10%. They're going to abolish tariffs on car parts. Machineries at 44%, chemicals at 22%, pharma at 11%. Those will be mostly eliminated. We also are very concerned and concentrating on the farmers and, of course, agriculture. The average tariffs on agriculture going into India are over 36%. Those will come down. Wine, something for France there, 150% down to 75%, eventually 20%. Olive oil, something for Italy, down from 45% to 0% over time. That being said, of course, one of the big concerns for the European farmers is that their own sort of produce and their own products are protected within Europe, and there are provisions for that within this agreement. For example, beef, chicken, rice, sugar are all excluded from this trade agreement, and of course, all this sort of health and safety standards for food products will also have to be maintained from the European level. So again, the idea with many of these tariffs, they will not go into effect on day one. They will go into effect over a progressive period of time, sometimes 5 years, sometimes 10 years. This still needs to clear the hurdle of the European Council, European Parliament, and some other sort of legal amendments. But again, this is for the Europeans a major step forward, and again, a major signal to the President of the United States that basically multilateralism is not dead, and if you cannot trade with the United States, you're going to have to go and trade elsewhere.
Ollie, thanks so much. Oliver Crook there, Bloomberg's Chief Europe Correspondent. Now, in just a moment, we'll be speaking to Janet Henry, Global Chief Economist at HSBC. But first, let's bring in Brendan Murray, who heads all of our Bloomberg trade coverage. Brendan, I mean, when you look at the deal, how significant is it? Is this likely to provoke the wrath of President Trump?
Yeah, obviously, and Ali laid out the economics of it, the 2 billion people, and bringing the tariffs down from very high, triple-digit levels. The two sides will take a win on all of that, but the geopolitical, the sort of optics of this are going to be interesting to follow as the days progress here. President Trump has lashed out at the Prime Minister of Canada for doing a deal with China. He, has a sort of loyalty test for countries that are going around doing deals with other economies, and so it will be interesting. And of course, he has his own deal pending with India that's kind of stalled. They put it together in a couple months. It's sort of a 5-pager. It's not exactly as comprehensive as the FTA that the Europeans and the Indians have put together. So the backlash from the White House here, you can bet that the U.S. is going to want exactly the same terms that the Europeans got on this deal. So there's going to be a lot to sort through in the fine print, and how that will go over with a U.S. president that doesn't take too kindly these days to other countries going around, and as they say, diversifying. To him, that's a disloyalty move.
Meanwhile, the U.S. president has also threatened 25% levies on goods imported from South Korea. So they're weaponizing still these tariffs.
Yeah, exactly. This is another one of those threats that probably won't get carried out. The president has done this a couple times when he sees trade deals stalled in the legislative process in other countries. That would be a pretty drastic move for to put those tariffs on Korea. So we'll see how that plays out. Markets kind of ignored it, so markets see it as a lot of talk and no action. So, and of course, Bloomberg Economics has a new analysis out today that says basically of the 49 tariff threats that the president has laid out since he was elected for a second term, he really only has followed through on 27% of those.
Yeah, it's a great piece actually by Bloomberg Economics that we'll be putting out also on social media. Brendan, thank you as always. Brendan Murray, head of Bloomberg's global trade coverage. Now let's discuss all of this, these trade moves, and the economy with Janet Henry, Global Chief Economist at HSBC. Janet, it's so good to see you. I mean, look, the global economy just seems a little bit uninspiring. Like there's nothing bad, but there's nothing great either. Is that a good way of qualifying it?
Yeah, I think that's a very
CFA level 6.
Good morning. I think that's a very fair overlay. The fact is there is a lot to be relatively positive about the global growth outlook. We've got fiscal stimulus. We've at least had a government reopening. Hopefully it won't shut down, or at least partially shut down at the end of January. And but we've still got unpredictable policies being announced. And also when we're constantly getting these headlines on a daily basis, and they are in some ways good news. 2 decades that this trade deal between India and the EU has been under negotiation, and it is progress that they've come to some kind of agreement. But actually, at the moment, it's still quite small in the general scheme of things. Less than 1% of EU exports go to India, but it's quite long term. you know, this is going to happen over 5 years, double it over 5 years. That goes beyond the current term, presidential term in the US. But the signalling is there, but markets are obviously focused on the here and now. So much going on. What's happening to growth? Still pretty solid. What's happening to earnings? Still pretty solid.
But trade, I mean, these bigger trade deals, are they positive for the global economy going forward, even if you have these like almost daily, you know, battles with the U.S. administration on weaponizing tariffs?
I think it is something of a jigsaw puzzle. We know that what we now have, relative to what we had just a year ago, was much more friction in world trade. Because the effective tariff, depending on how you measure it, on the US is currently of the order of between about 12-13%, something like that. So friction is always bad for world trade. You don't get the same advantages, competitive advantages coming through. But actually, the fact that India, for instance, is undertaking domestic reforms, these extraordinarily high tariffs, they're still going to be high, but they're going to be lower than they were, should be good news for the India growth story. And a big part of the India story over the last year has been, they've suffered from a fall, the payback on exports to the US, but they've had lower inflation, they've been able to cut interest rates, they've had more of a consumer story. So you've got different stories around the world in different countries, depending on how exposed they are to the tariffs and to the world trade cycle and their product mix that comes through. But overall, more friction in trade is not good. Trade deals around the edges, depending on what retaliatory action follows, could offset some of that good news.
Yeah, and actually on these trade frictions, let's listen to Secretary Bessent talking about Mark Carney.
I was in the Oval with the president today. He spoke to Prime Minister Carney, who was very aggressively walking back some of the unfortunate remarks he made at Davos. And Sean, I'm not sure what the Prime Minister was thinking.
I mean, we talk about the New World Order. Can you, it's one step forward, maybe two step backwards. It's unclear how it ends up. What does it mean for economic growth of blocks?
Of blocks? Well, the fact is, there are certain growth pillars globally at the moment, and we know what they are.
AI,
the various elements of AI, the AI-related capital, asset price gains, the AI capital spending story, the AI trade-related story, and then the other one is of course the fiscal stimulus. We tend to focus on the big beautiful bill in the US across the board, the Japanese stimulus, the German stimulus, as well as the next generation EU and Europe. But there are a lot of countries in the world that are supporting the global growth story through the fiscal stimulus. So there's a vulnerability there because obviously we've got high and rising government debt and markets may demand a bit more risk premium. We've had a reminder of that quite recently. And the AI story, we still think it's a transformational story, but will there at some point be overinvestment? Probably, but when?
Dan, even before talking about an AI bubble, do we have a full understanding of how AI changes our economies? I mean, you could see massive job losses or retraining that I guess we're not quite to grips with yet.
No, you're absolutely right. We're not quite to grips with. I mean, there's been no shortage of research that's been written on the topic. There's been an array of academic research in recent years, and broadly they agree that the peak period of the productivity impact will be in the early 2030s. But estimates range from, negligible to the implausibly high. But also we know that it's been gradual and then kind of exponential. ChatGPT was 2023, DeepSeek was 2025. We could be on the cusp of something much more significant. And obviously this is why a lot of people are focused on the fact that you're seeing the rise in unemployment rate, particularly in the last few years, amongst new graduates, whereas all workers, it's been more stable, partly because of the immigration story and partly because some jobs are not as easily replaceable. But I don't think it's all of the graduate unemployment story. We've seen it in India, we've seen it in China, we've seen it in the US, we've seen it in the UK. There has obviously been lower demand for entry-level jobs, and some of it is probably AI. I think we are seeing some impact, but it's not all of the productivity story at the moment.
Janet, when you look at the K-shaped recovery in the US, I mean, this is not, it's okay, but it's not what people want, right? If you want to bring everyone along. Do we stay in this K-shaped economy? And actually, what kind of role do you see inflation playing this year?
Well, I think a K-shaped story. We know that people that earn over $100,000 a year have been driving a lot of the consumer story in the US, and particularly the over 55s that hold nearly 80% of the wealth in the equity market and such like. I think there is some scope for some convergence actually within that, because we think about some of the tax cuts in the big beautiful bill, the exemption of taxation on tips and overtime. There could be a degree of convergence that comes through there. But broadly speaking, in terms of the wealth gains, yes, they continue to accrue to the higher earners and to the older parts of the population. I still think that will be an important part of the story.
And on inflation, again, there's been a lot of talk on whether inflation, we could see a rise in inflation even before these extra trade threats from the US because of an overlap of what we saw last year, but at the same time, we could be importing deflation from China.
Yes, there's not much impact so far from deflation in China. We've even seen that in Europe. Now, the euro's been strong. They've had a surge in imports from China, but goods prices have not fallen. In the Eurozone. There's a lot going on there with margins and such like. In the US, what you have seen is that goods price we're falling by about 1.5%, 2% per year. They're now rising by over 1.5%. Some of that is the tariff-related story. Remember, the China tariffs came through nearly a year ago now. It was in February last year. But we are seeing some other price pressures globally. Obviously, we've got bad weather at the moment. Gas prices suddenly. Memory chip prices, DRAM prices have been pushing up. We've seen it in service sector PMIs. So even if inflation doesn't explode higher, some people are obviously arguing it's a lagged impact of tariffs that's going to push inflation to 3-4%. We don't have that, but we don't have it coming down. We have quite sticky inflation, particularly as a lot of consumer spending is in services, which make up most of the consumer basket.
So what does that mean for the Fed? Political pressures notwithstanding.
Political pressures notwithstanding. Well, the Fed is firmly on hold, as I think we are well aware. The market is ascribing, very, very low probability of any change. So we know that the press conference will be all about Fed independence in particular. And as much as the journalists will be desperate for some kind of guidance, it will be back to watching the data. I think the policy is neutral. The risks to inflation are still to the upside. We'd have it not even below 2.5% by the end of the year. And actually, with the strong growth, helped by the fiscal stimulus in particular, the global economy, the US economy holding up pretty well, so the unemployment rate not spiking. So they're back to watching the data and obviously waiting to see what happens when the new Fed chair arrives.
Janet, thank you so much, as ever, for joining us. Janet Henry there, Global Chief Economist at HSBC. Now, President Trump has signaled he'll make changes to his administration's deportation crackdown. Trump's border enforcer in Minnesota, Greg Bovino, is leaving following a public outcry over the killing of 2 U.S. citizens by federal agents. Well, let's bring in our Bloomberg Deputy Managing Editor, Balazs Pance. Balazs, what led to this dramatic pivot from President Trump?
It is a dramatic pivot, Francine, and it's hard to see it as anything else than de-escalation or an attempt to de-escalate, which just goes to show how much the political environment around immigration has changed in the U.S. This used to be one of the go-to issues for President Trump, one of the issues that he pulled the strongest on, and now we see that changing. A lot of Americans have been horrified by some of the distressing images that have come out of Minneapolis, and there's been a lot of pushback from even within his own party about the handling of this situation by the DHS, by ICE, by all the law enforcement officers on the ground. And it's also given Democrats an opening to increase their leverage on him, which they exercise through this threat of a shutdown.
So, Balazs, where does this leave his immigration strategy and the risk of a government shutdown?
In terms of the immigration strategy, that's a great question. It doesn't seem like they want to completely dismantle this huge immigration operation. In terms of the shutdown, it doesn't seem like there's any firm movement yet. The Democrats have certain asks. They want things like body cameras for ICE and Border Patrol agents and warrant requirements. And the Republicans are not budging on that right now. They have until the end of the week to reach a compromise, but that doesn't seem likely right now. So the chances of a shutdown keep increasing every moment.
Thank you so much, Balish. Bloomberg Deputy Managing Editor Balish Pence. Now, coming up, how can Europe remain competitive with global powers? We'll discuss geopolitics with the Managing Director of Institut Montaigne. That's coming up next, and this is Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlinda Amin in Davos, Switzerland, and this is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk. You could look at it the other way. Obviously, this stuff is risk weighted. I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets. Take a look at how we're faring when it comes to Asian markets.
In an interview with Bloomberg, the British Prime Minister, Keir Starmer, says the UK will not be forced to choose between the US and China. Well, the Prime Minister is looking to reinvigorate strained business ties with China when he travels to Beijing this week, one of several leaders pushing for trade and investments with China. So what about the rest of Europe? Marie-Pierre de Baillencourt, Managing Director at Institut Montaigne, now joins us. Marie-Pierre, thank you so much for joining us. So, I mean, it's a very simple and the most difficult question of 2026 is how can Europe remain competitive? And do they really have to choose between China and the US, or can they stay competitive alone?
Well, this is a question on everybody's lips. And honestly, I don't think this is a good question. You know, the situation is changing, of course. We are in a moment of recomposition. You know, there's this Gramsci says about the old world is dying, the new world is yet to come, and in the meantime, the monsters are prospering. And the fact that we have to choose between two hegemonic powers is not a good posture, because we could not act as one, and we are still being herbivores in the in the world of meat eaters. And so we are asked, you know, with whom am I going to add to ally? Either it's going to be China or it's going to be the US, instead of calling for our own destiny. So I think this is a wrong question, and it shows how people are checking out and how they are losing nerves and vision. So,
Marie-Pierre, with all due respect, what are you optimistic about for Europe? I mean, there's a lot of great things, but even when I was in Davos, the Europeans were at pains in saying things of the past. Well, we were a great power. Like, what are you optimistic today when you look at Europe?
Well, first of all, the scale matters. And when we look at Europe, we have a scale that really matters with a lot of market and a lot of possibilities. We have innovation, we have educated people, we have good infrastructure, we have investment, we have creativity. All of this are, for me, good omen of what Europe could do if it was able to really leverage its scale. The problem today is that we have developed, of course, specific tools in order to be more powerful, and that we are very shy about using them. For example, we can work against economic warfare, and we have packages such as EU anti-coercion instrument to restrict market access, to increase tariff trades, to reconsider intellectual property rights, etc., etc. But the system and the mechanism in which we are able to use those instruments is very deficient. For example, it requires two votes. Yes.
Yeah, I mean, it just feels like we have a lot of stuff that the US has, but they do it better at a bigger scale. Do we need to reset the relationship between Europe and the US, and how do you do that?
Okay. So I think we shall not reset this because the US is our primary ally, and it's still a country with whom we have built prosperity and security for the past 70 years. And I think it's better to be strong with our former allies because we know each other, we know how to behave together, and we shall, once again, keep our nerves on what is happening. And I do believe that the American will respect Europe if we set up the condition of mutual respect. So I think we should not reset US-Europe relationship, but in the method and in the way we do it, we should reassess our tools, our levers, and the way to get the respect we deserve. We shall not be on the menu. This is Mark Carney saying in Davos, if you're not around the table, you are on the menu. So how do we organize ourselves not to be on the menu? And this is why I was mentioning a lot of instruments that Europe has and a lot of benefits that Europe can capitalize on in order to set a more respectful alliance with the US.
Maïtia, very quickly, how worried are you about the rise of populism in Europe?
I'm not so worried because there's of course all the populist campaigns that are very anti-European, but once populist or national populist arrives in power, they are very pragmatic. For example, Mrs. Meloni's Italy was a very good example of a very populist campaign, but a very pragmatic approach once in power. Same thing with Hungary, same things with Poland. You know, the reality call is enforcing upon political speeches in first instances. So I'm not so worried because at the end of the day, we all know that we need Europe. We all know that we need that scale. We all know that we cannot resist bullying country without playing the market scale and the complementarity of our resources and our capabilities, whether it is in defense, in economy, in health, etc.
Marie-Pierre, thank you so much for joining us. Marie-Pierre de Bailliencourt, Managing Director at Institut Montaigne. Coming up, traders on alert for intervention in the yen. We'll discuss the latest in global FX markets with James Lord from Morgan Stanley. That's coming up next, and this is Bloomberg.
2026 for us is the year that everything just comes together, right? We're not just moving money. Last decade, literally, we renewed the rules for Africa's growth, right? And the future of Africa, in our opinion, is not hybrid infrastructure led. When Africa wins, the global economy wins. We're building the pipes, and those pipes are now off age. Now, as of right now, we are the biggest fintech in Africa, the most licensed non-bank entity. In the last 10 years, we built that muscle. Now we're putting that to the test, all right? Now we've covered the entire world. We have UK, US, UAE, Canada, Europe covered through our partnership with Development, for example, and Nuvia. And the point behind that really is how do we ensure we use that infrastructure to drive the next phase of growth? We've started with by empowering our customers across all our segments.
Good morning, this is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
Very good question.
Interesting question. Good question. Great question. I so appreciate that question. You simply ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute automotive news whenever and wherever it happens. I'm Matt Miller in Detroit, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. India and the European Union have agreed a free trade agreement after nearly 2 decades of negotiations, with both sides wanting to reduce the impact of Washington's tariffs. The Goldman Sachs chief executive warns of a slower trajectory for talent growth this year, despite having an optimistic view on global markets. Plus, China's ANTA buys a $1.8 billion stake in German sportswear brand Puma from France's billionaire Pinault family. Now, gold is holding above $5,000, with the weak U.S. dollar helping to extend the blistering rally, fueled by geopolitical risks and investors' flight for sovereign bonds and currencies. Let's bring in James Lord, head of emerging markets FX strategy at Morgan Stanley. James, so good to speak to you. And we're saying, like, FX is cool. I always thought FX was cool, but you're definitely busier than before.
Yeah, I mean, I don't know if FX markets being cool means that FX strategists are cool again, but let's see. We certainly get a little bit more attention from clients, yeah.
Everyone's cool in this space. So, you know, it does seem that dollar traders seem to be paying the most records to bet that it continues falling, right, on the sell-off. Is this because of U.S. political turmoil? Is it because of other things in the world? And what happens with dollar this year?
Yeah, so there's been a lot happening in FX markets. Clearly, the dollar's had a pretty weak start to the year, and I think there are a range of different catalysts, really, but a lot of them have been fairly unconventional. I mean, traditionally, when people look at FX markets, they focus very much on the macroeconomic data, interest rate differentials, what does it mean for the Fed, and that generally has pushed the dollar around. This year is an echo, really, of what happened in the first half of last year, where you had a lot of unconventional catalysts and a lot of policy uncertainty driving the dollar weaker. And I think you've seen that in a number of instances so far this year. So at the beginning of the year, there was a lot of focus on the Fed and the case against Chair Powell. And then, you know, we moved on to the Greenland issue. And now we're moving into FX intervention, which is something that happens in FX markets, but in the way that this particular one with Japan was conducted, you know, it looks like the US Treasury was behind a lot of the rate checking. And so, you know, that's unusual. And so you're sort of moving into a world where, let's call them unconventional catalysts, have been driving the dollar weaker. Hasn't really been much focus on the data.
But James, I mean, overall, when we talk about intervention, it kind of startles people, right? It says things that have to be so bad that countries and finance and treasuries want to get involved. I mean, do you look at it that way? Does it just point to much more anxiousness out there?
Well, I think, like, in general, you see a lot of intervention in FX markets in EM, and that's always been about trying to restore external balance sheets, trying to maintain exchange rate competitiveness. And, the US has started to show a little bit more of an interventionist streak in cases where it sees it's in its interest to act. And we saw that with Argentina. And now, we know that this administration has always talked about the weakness of the Japanese yen and other Asian currencies and the strength of the dollar. And, there is also the angle where if you see instability in other countries' markets like JGB yields, that could spill over back into treasuries. And so the US clearly has taken a slightly different track relative to previous administrations and wanting to get a little bit more involved.
So what happens with yen? I mean, if there's lack of intervention follow through, could it really undermine some of the recent yen gains?
So I do think the strength of the yen has in part been driven by this expectation that the intervention is going to be coordinated. It's not just going to be the Ministry of Finance in Japan, but also the US Treasury potentially acting. And I think that is now built into the market price. And I think if you don't see follow through, then the markets will start to question whether or not it's going to happen. And so if that is the case, you could see dollar yen start to edge back higher. But ultimately, we do think that dollar yen will be heading lower. We have a target of 151. We're sort of positioned that way. And whether it comes through intervention or more Fed rate cuts later in the year, we think ultimately the dollar will weaken.
I mean, if you look at some of the other, what's gold right now? Is it a play to move away from U.S. asset, or is it also hedge against other things?
I think it's a hedge against uncertainty in general, not necessarily something specific to the US, but we live in a world where there are not very many high quality AAA rated safe haven assets. You look at what we see in the JGB market, what you saw happen with gilt in previous times. There's a lot of angst about fiscal sustainability in many DM markets, maybe slightly less actually in EM these days. But I think if you're a central bank reserve manager and you're looking around the world for where can I store my reserves in a safe jurisdiction in high quality rated paper, the number of places where that tick that box is arguably falling. So I think gold is benefiting from that.
Are there any other pairings that you look at? I know there's conversation about Swiss franc, but anything actually in the emerging market space that we should pay closer attention to?
Whether emerging markets are now the new safe havens?
They could be.
Well,
parts of it could be.
They're certainly benefiting from the weakness of the dollar. I mean, the dollar weakness is a huge tailwind for EM. And I do think it sort of calls into question some of the historical valuation metrics that people have used for EM, like rate spreads to DM bond markets, for example. If those bond markets now have a little bit more term premium in them, maybe it's totally reasonable to expect emerging market spreads to come in. And I think, when you see the fundamentals in EM on the fiscal side, and you see many places that are either stable or improving, just look at South Africa. And monetary policy is pretty credible in EM now. I think you see a number of central banks where you have very conservative monetary policy, and set against the issues that we see in the US. I think EM looks to be in good shape.
So I like your note looking ahead to 2026, because you basically highlight 8 financing themes that are some of them are a little bit quirkier than others, but it kind of really sets everything in a very, very interesting perspective. What do you expect? I mean, January is quite seasonal, so are you expecting a lot more volatility for this month? We're almost to the end of January, even if it feels like it's been 50 days at least.
You mean on issuance trends?
Yeah,
specifically?
issuance.
Yeah, I mean, it's been a great start to the year for issuance. I mean, you've seen many EMs coming to the market. But I think what will be really interesting for me to watch as an FX strategist this year is what will be the split between dollar financing and other currencies. Last year we saw actually a bit of a shift in towards euro denominated sovereign issuance from emerging markets. So clearly as the euro was strengthening, more demand from investors for euro paper, and we saw people tapping that. And I think if we see that again this year with EMs and anyone that's issuing foreign currency denominated debt, more growth in the euro market, it will start to paint a picture again about this kind of diversification away from the dollar story, which is clearly something everyone's quite focused on.
So how would you construct your ideal portfolio if you look at diversification in FX?
Well, I think you've got to stay long EM carry.
Right.
That's clear. There has been a little bit of uncertainty, I think, about just how much you want to be short the DXY or some of the or be long the low yielders within emerging markets. But I actually think that now we could see, last year was a clear outperformance from high yielders within CEMEA and Latin America. Asia lags. I think this year we could see a little bit of a catch up in some of the Asian currencies that lagged last year. The yen strengthening can potentially be a catalyst, but we also see some catalysts for Korean won to start to strengthen. We can see, for example, local authorities in Korea are trying to rebalance their asset portfolio. The NPS news we got yesterday, and so I think there is some scope for some of the Asian markets to catch up a bit.
James, thanks so much for joining us. James Lord, their head emerging markets FX strategy at
You might
Morgan
want to check
Stanley.
out
Now,
the
the
store
Goldman
if you're
Sachs chief
looking for another
executive says he
product
sees
that's, from a different manufacturer. I thought the gates were pretty impressive, and you see I'm not using them right now because really I just do my typical flying. I don't necessarily do my gate flying. I tend to feature gates because, well, I tend to not use gates because most of the time when I'm doing flying, I have a short time window to fly. It's pretty rare I have more than, say, an hour. So I usually just grab a handful of batteries and my recording equipment and everything and just fly it and have a good time. Other times, like in the nighttime, maybe I'm just, I'm opting out from not doing anything on YouTube and I'm just flying, and I'll set up a little bit of a racetrack, which is what I'll show later on in the video, a little bit of, I'll say track flying. I won't say racetrack flying. But I'm also using the Patrick J. Clark's Project Mockingbird too. Of course, I am flying in acro mode. I'm not using angle mode. I actually just kind of stink in angle mode. And I'll put a link down in the video description to the Project Mockingbird website. It's projectmockingbird.squarespace.com, where you can go through the setup for this tune. Of course, if you fly in acro, you can just dump the CLI dump straight on it, and then maybe move your modes around to your radio, and then add your OSD elements where you like them. Here we're coming in to the end of the flight, and you see that we get 2 minutes and 21 seconds, and our battery bounces back just up to over 3.5 volts. Here's me just doing a little bit of gate flying. No audio on this. I didn't record. I always record my DVR, but I don't oftentimes on these sorts of things get my audio recording camera out, so you can't necessarily hear how the quad flies. But you can see I've got 2 gates out, and I'm just kind of having a good time. And I think one of these things that even if you've got a small space, say you have an apartment or condo and you don't feel it's very big, throw down a couple of gates, and it can really just change your environment and give you an additional challenge too. For me, gates aren't easy, and those guys that can hit gates reliably and do it really super fast with whoops, they're really, really skilled pilot, and maybe you just need to practice with some gates of your own. And at $13.99 for 3, it'd be pretty easy to get 3, if not 6. And in a small space, you can make it a whole lot more interesting to fly and challenging and fun. And these blow up, but I am not concerned about them. I've had them blown up for a week, and they haven't lost any bit of the tension that I put in them when I blew them up. So, and we'll do an assembly here within the video when we get back to the desk. That's the thing that we'll cover first when we get back to the desk, and then we'll talk about the quad. But I think next up, we can go outside and we can do a little bit of video and range testing. So as you can see, I've got my little slip of paper. I stick it down in front of the camera to let us all know that we're in D16 mode. That's not just for you, but it's also for me, so I can sort through all my DVR stuff. I flew most of my flights on D8 mode. That's just kind of a gut reaction, but I wanted to test D16 because they state on the product page some improvements as far as the video reception range and also the receiver, and being able to do D8 mode and D16 mode. I did this in D8 mode as well. I didn't find any differences as far as the range or the control link. And this also shows the video reception. I just posted, it would be about yesterday, I think, that I had a quad and I was getting lots of video breakup. Of course, that quad's running Express LRS, so different equipment, but this is using my Orca goggles. It is a cloudy and dreary day. And this was during that same period that I was flying that Flywoo 1S baby or Nano baby. And, so I got the wind super low, so I grabbed up everything I could and made use of all the little bits of time that I had during that wind break, because it did pick up here probably 30 minutes after I completed my outside flights with those 2 particular quads. I had about a 50-minute break, and then the wind came back up. But you can see we also go around the backside of the house, and this is at 120 milliwatts. Sure, we get some breakup, but it's not very bad. Quite respectable in my opinion, and I was surprised and taken aback by that. So if you're looking to fly your whoop farther out, of course I would recommend having a beeper on it. The board does have beeper pads, so you could add your own. But if you like to fly a little farther away from yourself, you want to stretch the quad legs and go out to a field, or you just have a bigger space, you just want to cruise around and explore, yeah, we got plenty of video and control link. and I go up, I think it's 3 houses up the block and across and behind my house, and you know, I think you'll find that the camera looks better if you have a full sun day, of course, sun angle. So if you get the sun directly in the camera lens or you fly towards the sun, it is going to be, you're going to get that black dot in it because it's one of those cameras of just like a lot of CMOS cameras that they can't compensate quite enough for the super bright sunlight. And as I turn around this truck, that's where I'm getting a call out from my radio that the RSSI is low. Can you go farther? Sure. How much? I don't know. But I didn't want to walk down there and go get it. So I just opted to turn around the truck and come on back. Also, you can see our battery voltage. I did change that to kind of meet my needs. We were currently down there in the 3.2 area, but I'm going to fly it down a little bit, and then you'll find that we get about a 3-minute flight like this, and the battery does bounce back to just about at 3.5 volts per cell. So if you like to go out and do cruising and you like whoops, seems like a pretty good candidate for it. The price that I'm seeing on the website for this comes in at $139.99. You know, the prices of everything that we've been buying is going up, except for those gates. Price of those gates went, you know, when they launched, they came down, and surely the materials will start costing more. But yeah, it only comes in FrSky, so if you're doing FlySky or Crossfire, we'll have to add a receiver. Here we are. We're going to land here. The battery kind of low. Keep coming back up, 3.5 volts per cell, 3 minutes and 10 seconds, a kind of cruisy exploratory flight. Okay, so like I said, we're gonna do one of the gates. They come packaged really small. This is an entire gate. Inside here is the balloon part, and then you get a straw with each and every gate, so you get 3 different straws. So I guess if you got 6 or 10 or whatever of these, and your buddies are blowing them up, you don't have to worry about sharing the same straw. You might be concerned about that. But it's pretty simple. I'm going to try to do it here on camera. So we've got instructions printed right here on the front, but it's, you know, pretty basic. We take this center flap, we just kind of bend it up. You know, the balloon's going to go in here. And then we've got these creases. Hopefully you can see that, these creases right in here. So what I do is I just put my thumbnail in there, bend this part up, and you see we've got this little cutout. That's trash. We don't need that anymore. So we bend this up, and then I take my other fingernails to bend this part back down. There. So you get a little shape like this because they're going to slide together, the 2 pieces, just the same. Bend, bend. And then we do the same with the other one. Fingernail, bend, bend, and bend. Oh, our trash fell out. And then we just kind of slide these things together. So that's kind of the base assembly, and this can be a little bit fussy. I've done this obviously 2 times, but see if I can use my desk as a little bit of an advantage to get everything to line up, get in there. There we go. So now we got, whether it's an aggressive freestyle or it's just aggressive as far as speed goes and racing. It's hard to beat the performance to weight of this. Of course, it does come at a cost, so you need to take a look at the cost and see what you can afford. But when it comes to flying fast, you know, lower weight helps us maintain not just the speed, but the ability to be agile when we're going fast. And if you start putting big batteries, it doesn't work out very well. We do have a battery tray down here, and we have these 2 nubbins. The battery does not rub on, or excuse me, the battery does sit on those 2 nubbins, so it does not hit the USB port. So when we come down for a crash or our unintended landings, hopefully you can see right in there. Can you see the USB port? It's got a good measured distance away from the USB port if you can't see that. And the batteries do stay in there pretty well. Of course, you can do them any way you want. Maybe you want to be able to plug in your battery from this direction. Oh, that's too short. So I guess we are going from the back. I thought it could go both ways. I could have swore I tried that. I think one of the biggest shortcomings, and I've said this before with other whoops, and we're just going to take a look at the lights here. It's got some interesting little lights. Of course, they change depending upon whether you have your radio on, so it's bound up. But this connector, we really need this connector to go away. And it's not specific to Newbie Drone, it's the gold pins. This is going to work fine for some period of time, whether it's 50 flights, 100 flights, 200 flights, whatever. But eventually you're going to start to notice that this is going to break down, and you're going to see more battery sag when you arm and take off. than you once did. Of course, there could be other causes for that. We could have motor damage, we could have bad props, we could have hair or debris around the motors and that we need to clear out. Maybe the motors are just worn out. But typically, I think it's pretty much well known within the Whoop community that rolled pin is the poorest performer of our current day Whoops and their connections. So that's something that I think we need to change out, or at least you'll change out eventually in your ownership of the quad. I pointed it out earlier, but also the motor connectors are different. Let me grab one. So this is the tool I use for removing motors. The prop tool that some Whoops come with also, I am told works well. So if I take another motor, you know, this is an old broken Happy Model motor, and I try to plug it in, it's just not going to fit. The motor connectors are smaller. Let me get a front side view so you can just see that. So you either have to snip the motor wires when you want to change out motors and to use something that, you know, like this doesn't have a connector the same size, or you buy more Nubidrone motors because all their motors will have this size of connector on them. Also, the camera connector is the same. Hopefully you can see that down there. It's real slim. I'm not sure of the measurement of that particular connector, but for our typical micro connectors that come with cameras, that's not going to fit in there. Again, you'll have to snip that and then wire your camera together rather than using the native camera connection, if it came with a connection. I mentioned it in the quick roll, but I'll go ahead and mention it again. This little piece, it actually comes, I think it comes this way, kind of loops down around the bottom of the camera. That broke off during the course of one of my day's flights. Of course, I have Goober canopies. I'm a fan of the Goober canopies. They're very hardy, and that's the first time I've broken this piece as well. So that's a new experience for me. But when I remounted this camera using, you know, an unbroken camera holder, I did find that the camera was slipping out and then it would vibrate around. So I don't know if you can see it. I tried to add some glue. It's actually around the round part that goes around the lens. That way I could actually pull the camera out at a later time if I wanted to. So I just added a touch of welder. So if you see the weight coming in above where you expected, some of that weight, the smallest amount that is, I didn't use much welder, would come from that glue. Of course, I mentioned it in the Flywoo video, but this has the potential of you being able to use the Patrick J. Clark Mockingbird tune. Many people are fans. If you haven't tried it, you know, do a dump of whatever you've got and then try a Mockingbird tune just to see what you think. He also implements some things that are specifically made for angle racing, which is, I believe, one of the things that he really enjoys, and he does all of his work for free. I think he does offer shirts, so if you wanted to buy a Mockingbird shirt, you know, I think he might earn $1 or $2 from that. So if you want to help him pay his web hosting bill or help him get some product to do additional Mockingbird, that's one way of doing it. Something else that I noticed, and some of you veteran whoopers and maybe just recent whoopers can tell me, but when I got this out of the box, the props were real high, pretty much like you see them now. And I flew it around and I thought, wow, this is feeling really good. And it does fly very, very well. Of course, I've got the Mockingbird tune on it. I did fly the stock tune. I think the stock tune was pretty good, but for as far as racing and the sharp curved turns, the Mockingbird tune is better as far as handling the prop wash and not sliding out. But I pushed the props down. You know, I'm an advocate of protect your motor stems, push the props down, and you know, you'll save that potential for bending a motor shaft or even snapping the motor shaft. So I pushed them down, and I immediately felt a pretty big difference. And that was also a new experience for me. I had not toyed with prop position on the shaft. As you can see there, I moved them back up. I don't think I moved this one back up as high as I needed to, though. But I moved the props back up because I felt like it flew better. I don't recommend doing that if you're flying real stiff props, like the Gem Fan props. Actually, I don't recommend you doing it all if you're at all concerned about your motor shaft and the health of those motor shafts. But I think with the Aziz props, because they're more flexible, they tend to give a lot better. And I know you have prop protection, but when we crash, we still hit the props. I broke a prop or two. I've broken a lot of props in my Whoop flying experience. But if you fly with these props, I think you're much less likely to bend a motor shaft because they do flex and bend when you do have those crashes. Also, I think Nubidrone's frames are oftentimes considered the most durable of the Whoop community's frames. Maybe not everybody has that experience. Chime in down below if you have different experience with Nubidrone frames. And I I'm sure all ears. That's one of the ways that I try to help others is passing on information I receive from you and kind of compiling that together in my brain of how often am I hearing something, and then I can report that on. Whether I support that strongly or not, that might be another thing altogether. I think they did a nice job with this board and the receiver and the video. You know, I think the one thing that most people will look at this outside of maybe the connectors that are used is the camera. The camera doesn't show great outside. It's mainly used for inside. I think it does LED gates pretty well as well. So if you're into whoops, you probably already fly this camera, and you can also leave some more opinion about this particular camera. Wide field of view when it comes to whoops and going fast, for me, is very, very important, and I think it is for others as well. Again, highly recommend Nitro Nectar if you want to go fast, even if it's not with a Newbie drone whoop. Even if you've got a different whoop, give these batteries a try. I've got loads of them now, and I think for the weight, the performance, this is the best way to go. Again, I mentioned it earlier, this Newbie drone Acro B65 with this new BLB3 board is $139.99 in the US. You don't have any protocol options, so FR Sky only, but it did do D8 and D16 on my jumper D-Lite just fine. And it had good range. I showed it in the video. The video reception is improved. I showed that in the video. And we also have those new gates, which I think make small spaces fun and can make large spaces a party. If you have any comments, questions, suggestions, or otherwise, please let me know in the comments section below. I appreciate your time. Thanks for watching. Hello everyone, today we're taking a look at the NanoFly 16 from Sub 250, a new company in FPV. On the NanoFly 16 are 0803 19,000 kV motors, and on those motors are HQ 40mm bi-bladed props. The FPV camera is the Caddx Ant. The all-in-one flight controller that I have here is the Express LRS edition. It is a 5-amp ESC. Of course, it does have an OSD chip on there as well. And the VTX, as part of that all-in-one, goes up to 250 milliwatts via smart audio. And the VTX antenna is right there. It's on a micro UFL. And something else that impressed me about this board was the size of the pads. They're still very close together, but they're fairly lengthy, so soldering could be an option if this board becomes available separately. The NanoFly only comes in one other version, and that is with TBS Crossfire. You can get it with batteries, possibly two, but due to a shipping mishap, I didn't get any of their batteries. Battery connector that it does come with is the GNB 27. It does come in this nicely printed case, but it doesn't really shut when you have the battery tray attached to the carbon fiber frame. So it's not much of a carrying case. In the box, we get a few extra nylon nuts, some super small screws, and a hex driver. Little tiny screwdriver for your Phillips screws. Extra set of HQ 40mm props, a prop direction card, and stickers. It weighs just under 29.5 grams. Being I didn't have the batteries that they're going to ship it with, which are 380 milliamp batteries. I have 380s, but they all have PH20 connectors. I used this Nitro Nectar 300 milliamp 1S battery. Very good performing battery. More on battery details during the flight. And with that battery, our flying weight becomes a little over 38.5 grams. Carbon fiber looks to be 1.5 millimeters thick, and motor post to motor post looks like 77 millimeters. Relatively calm evening we have here. So the sun's going to be kind of low, so we're going to get the sun kind of in our FPV camera when we fly back to the what we're calling the cabana side, or cabana, depending upon how you want to pronounce it, side of the yard. That's the yard with the new construction, the outdoor cook space, that stuff. So we're going to get that. There it is, sun just right in our eye there a little bit. Now, all the materials, or at least the materials I've seen on their website, kind of position this as an inside flyer. So I am going to fly it inside. But I don't recommend it. It's a one-time thing, and I'm flying in a house. I actually am fairly nervous about, nicking a cushion or a bit of the couch or furniture, and it ended up with a little tear or even just a thread that pops loose and becomes kind of like that Weezer song about pull the thread on your sweater. But at any rate, so we're going to start out with the outside flight. Again, these Newbie drone Nitro Nectar batteries are very important to the flight time that you're seeing in front of you. Again, I cannot tell you what you'll get out of the batteries that they ship with. They're 380s. I suspect they're made by GNB because there's just not that many companies making 380s, but I could always be wrong. I did try the Emax batteries, the 300s that are made by G&B, and I got about 220 to 230 on those. I tried the 350s from G&B, and I got like a minute 40 if you kind of allowed the annoying low battery voltage to get at you. And the 450s don't really fit in the battery holder, so you're kind of in that odd middle ground. And quite frankly, the Nitro Nectars are a little bit thick, so they bow the battery holder just a touch. Speaking of batteries, I know that getting the Nitro Nectar Golds are going to be a little bit of a challenge. So, maybe this review doesn't help you too much when it comes to battery life. I've got to share with you. Hello, everyone. Today we're taking a look at the RCN Power GTS V3 1002 motors. That's a tiny little micro motor, and I think one of the things that some of you may be most interested in outside of, the typicals for a motor performance is these have the double ball bearings in it. So that should mean that their efficiency, their power, their torque, all those motor properties, it should maintain those over a longer period of time because it does not have bushings, which bushings are non-movable parts, so other parts are wearing on those bushing parts. So these should be much more even over the course of their life, and therefore, if you tend to fly one quad a lot, and it's a micro, just check into this motor. I do believe these are available to purchase. If Pyro Drone has any, I saw them on their website, and any other websites I could find that might be carrying these little guys. I have 3 different versions. First, thank you RCN Power for sending these over for some testing. I enjoyed spending some time with them. I did test them on several different quads. I built a couple fresh quads to kind of give them a fresh start, as well as a couple different props. So there's a lot of flight footage, so I'll try to condense it down. But I think the first thing we need to do is take a look at the weights of this motor in comparison with some other motors that we typically use on micros. And as you can see here, I've got kind of a sheet of 8 motors I happen to have around. So we've got the RCN Power kind of in the second column on the left-hand side, top row left there. Also, we've got the newer Happy models, some older Happy models, and we've got some Tiny Whoops. There's 2 different of the newer ones, newer and newest. We've also got Tiny Whoop motors, Beta FPV motors that are a bit older. They have the multicolored motor wires, a GEP RC 1102, and newer 1102 from Happy Model as well. Do note that 1mm and 1.5mm is the shaft. So, of course, with a bigger, thicker shaft, you're going to have more weight. But I wanted to throw in those 1102 weights because of the curiosity and probably because of what I flew them on. So first off, I did 1S and 2S testing. These over here are 1S. If you're curious about this little guy, this is the Rocket Race from jax3dprinting.com. It's a frame. He may be also selling kits with motors and other components. He was, at least for a time, so check out jax3dprinting.com for that. So I've got the X12 board down here from Happy Model, which gives me a lot of ESC overhead. This is a fresh build here. This is actually a prototype frame. So you'll find that the dimensions of the arms and stuff like that are a little bit different on the production version. But I went ahead and used this because I fly a lot of this frame, so I wanted to have that as a comparison. Also, the Mobula 7, the ELRS 1S, got 2 of those, so I put the RCN Power motors on those. And I did test them with the bi-blades, so I could do a straight across comparison, as well as putting tri-blades on there. The short version of this, oh, I forgot one. Then I've got this one over here, which is another Rocket Race. This is a 2S edition. You could probably tell the difference in the frames a little bit. This is a little bit more production over here. This is on 2S, so I used the 14,000 kV motors, and then I did a throttle limit to bring it down closer to 10,000 kV, so I can compare it to the typical Rocket Race that I've been flying and taunting here online for the longest time. I flew it on bi-blades and tri-blades. Tri-blades are on here because tri-blades were last. Of course, working up a pit tune for the different motors and the different props, it takes time. But in this video, hopefully it will be able to answer your questions or at least give you an idea of how they fly in different configurations. Also, if you're looking for something like this, which this is the Baby Turtle from Sub 250 FPV. This is also another really good candidate for a frame for 1S or 2S. He is on like his 6th edition of this. So a more traditional sort of micro frame. This happens to be 1S on this particular one. And this was another comparison I was doing with 1102 18,000 kV motors. So that's kind of a base plan of testing. Now, of course, we can always go to the motor spec sheets and we can take a look at all that information. I'll leave that to you to do. Again, link down in the video description. I'm sure every reseller is going to list those motor specs, and then you can find the motor that you want to compare it to. Motor listings pretty much universally have that information. I shouldn't say universally. It's common for it to have that information from our retailers, so you can just compare whatever motors you want to compare it to. To get down to my opinion of the motor, I think if you're flying 0802 or you're flying 40 millimeter props, whether they're bi-blades, tri-blades, or quad blades, yeah, I think you're going to want 1002 motors. I think the efficiency is close enough to where the flight time will be negligible, but the performance, especially in a freestyle sort of format, you're going to want these whether you're flying 2-blade, 3-blade, or 4-bladed props in a 40 millimeter format. Now, when it comes down to 2S and flying 2-inch props like I have here, I would say it's more viable. It's not more viable. It's actually good with bi-blades. So if you're building something like the Baby Turtle from Sub 250 FPV, really good candidate is to use these 1002 motors and then use some sort of throttle or scale or motor limit in order to be able to, fit your ESC. I could probably run this full out on the 14,000 kV on this particular board because of the ESC that it has on it is higher amp rated, so it should handle it fine. But I wanted to compare it again to running 10,000 kV that I'm so familiar with 1102. When it comes to tri-blades, you're starting to push it a little bit. And that's one of the areas that I noticed when as I worked in the PID tune was a little less forgiving, so I had to be a little bit more specific in my PID tune than I was with bi-blades. And I think that comes down to when you're doing the hard, fast, quick change in direction maneuvers, you're trying to minimize that prop wash because you're going one direction and then you flip around and you nose up and you try to go hard the other way, so you're flying into that dirty air. The motor's ability to be able to make the spinning adjustments in order to minimize that prop wash, you could start to see that coming out when you run on tri-blades. Not surprising, but I wanted to give it a good solid go to make sure I had a good feel. I didn't want to just guess, but I think on bi-blades, it flies really nicely, really well. On tri-blades, we start to push it. On tri-blades, if you've got a super light build like this, I think the 1002 motors are very viable in a tri-blade configuration. But if your build starts to get a bit heavier, then I would suggest going to an 1102. I can't give you an exact weight. I can weigh this one for you to give you a weight, and here I'll do that now. My all-up weight here for the Rocket Race from jack's3dprinting.com, 32.25 grams. So I would say if you get closer to 36 or 38 grams in your build, yeah, you're probably going to want 1102s. Then if you get to above 45, you're probably wanting 1103. Of course, there's a pretty good weight jump when you go from 1102 to 1103, so that's something else you need to consider when you're doing your motor research. But I think below 36 grams, you could run the 1002 motors on 2-inch tri-blades, and it'll perform pretty well. I like it better on bi-blades, though, this particular build at this particular weight. So that's my opinion on these motors. Now let's get into the flight footage to where you can develop your own opinion. Our first flight is the Mobula 7, 1S in a bi-blade configuration. I'm not going to go through each and every prop test that I did. I apologize if that irritates some of you, but that would just get to be probably a ridiculously long video on this particular motor. On a 40 millimeter prop, it's going to fly all the 40 millimeter props well. We should know that. We've been flying the 0802 motors on all sorts of different 40 millimeter props, and they've been handling it fine. What you'll find is in the freestyle maneuvers especially, and hopefully I'm demonstrating that enough, recoverability, quick response, change in direction, there's all a different feel in the prop authority. Of course, that shouldn't be a surprise either because it's a bigger motor. Bigger motor should handle prop size that we've been flying on a smaller motor a little bit better. I think the difference if you're just getting started in your flight journey is more going to be about the longevity of the motor. I think you'll be less likely to damage the motor in crashes, especially if you tend to fly in more harsh environments than the 0802 motors. We've seen different things. I haven't experienced all of them, but some people have bent the 1.5 millimeter motor shafts. Some people have ripped some motor bases off. Other people have dinged up the bell or had the bell separate when they weren't flying the unibells. Yeah, my neighbor Errol's coming around here. He's going for his evening walk. I'm flying out front because, well, it was all wet out back. So I spent a pretty good amount of time. I think it was about 4 days flying the little guys out front here just to try to get some flight sample and get a feel. And also I had to work on the tune quite a bit, of course, because when you change a motor, got to change the tune for the most part, unless it's the exact same size of motor, which we're not dealing with. Let's move forward, and then now I'll show you the original Mobula 7 with the 0802 motors. Here's the original Mobula 7, again, on those 0802s. Thank you, Rapid Fire, for syncing right away at the beginning of my flight. That's what the video aberration was, if you aren't familiar with that, the Rapid Fire sync. And I think this does show. I'm not trying to make it do this stuff. I'm just flying, having a good time, and getting a feel for the motors, and I'm recording it so I can go back and look at it. I think this shows that, like, in those bigger maneuvers, if you're flying a 40mm prop, you have better recoverability, better authority on a 1002 motor. And also you notice that slight wiggle, that was the 0802, or this particular quad, and the PID tune that it comes with, wanting to yaw washout. It corrected before it actually did the full washout, but it was potentially there. So you probably are having a little bit of a hard time seeing it. That's why I left it in the OSD as I wang into the rain gutter there. Yeah, I wasn't just trying to record a video. I wasn't trying to do a quick hitter just so I could put something out on YouTube. I wanted to have some fun and to experience these in a couple different configurations so I could be sure that if you decide to get a motor, that at least you'll have some idea of what I think of the motor, if that's important to you. Sometimes I don't give my opinion very well, and I just leave it to you to make your judgments. And sometimes I get a lot of comments of, well, what do you think? Well, this is what I think. I think these motors are going to be really, really good for the 40mm prop. And if you're running 2-inch bi-blades on 1S or 2S, it's also good. And if you want to fly 2-inch props on 1S, I would probably on 1S, I'd definitely stick with the bi-blades. I think when you go to the tri-blades on 1S, 2-inch prop gets to be a little bit much for the motor. But, you know, that's try it for yourself if you're out there and you're working on a build or something like that. I think this motor size is probably going to take over for 0802. That's just a guess. I'm sure everybody who makes motors out there is going to see these as well as some others that we saw recently launch on the market and go, oh, there's a new motor market to go after. We need to be a part of that. Okay, let's move forward. I'm going to jump over the open prop stuff that I did over 40mm props. I think we covered that pretty well in the Whoop format, and we're going to go into the 2S testing that I did. This is on the TKS Rocket Race from Jack's 3D Printing. I've probably said that about a dozen times. This is on bi-blades, and it is on 2S. You can see there from the OSD, the lower left, we've got, well, we started at over 8 volts, so 2S battery, of course. And you can kind of make out the prop a little bit, at least before we arm. It's the bi-blade from GemFan, so that was the particular bi-blade I was testing in this particular case. Again, I reduced the throttle to try to match the 10,000 kV for my own purposes so that I could do a comparison over flying the same essential quad at a very, very similar weight with bi-blades and tri-blades both, so I could do that comparison side by side. And I think, well, I've got several of those rocket races around. I love that one, and I've built so many of them. Because I can't go without having one in operating order. So I think I would definitely keep one with the bi-blade on it. I liked how it sounded. It's a funny little thing, but I liked how it sounded. And I thought when it came to the quick, hard maneuvers that it handled that bi-blade really well. The 1102 is going to handle it much better, but I think the 1102 motor is better suited for the tri-blade 2-inch prop. I've kind of said that a couple different times. You never know. You could be scrubbing through the video and miss out certain sections, so hopefully you have heard my thoughts on the motor here. Pyrodrone should have them listed. I'm sure they're listed on other websites as well, and I'll put the links down in the video description where you can obtain one or at least see the web pages with listings, because who knows if they're actually in stock and available. That's something that we'll have to check at the time that I finally get this video out. Yeah, it does take me a while to do these sorts of videos. The efficiency side of thing, I mentioned it at the beginning of the video. You know, you can look at the spec sheets, but I I'm flying different batteries all the time doing my testing on these things, so I wouldn't want to say that the battery efficiency or the flight efficiency or motor efficiency is the same, less than, equal to than any real motor, because I have no science behind that. It's comparable, and I think it's not going to cause great alarm as to how it impacts your flight time compared to say an 1102 or 0802, depending upon what you're comparing it to. Okay, let's go ahead. That's a pretty good sample of the bi-blades. I think the bi-blades is where it's at on 2S for the 1002 motor. But let's go into the tri-blades so that you can get a comparison between those two. All right, same evening. I do believe the sun's just a touch lower because I had, 4 or 5 flights on one and 4 or 5 flights on the other after I'd spent a couple days working out the PID tune. Again, tri-blades, 2S, 1002 motor. It's the 14,000 kV one, but I've done a motor scale on it. Actually, I did a throttle reduction on it to bring it down closer to a 10,000 kV because that's what I'm used to flying on this frame. And I think that's a really good match as far as performance and flight time with the TKS Rocket Race. And hopefully I'm demonstrating the same sort of maneuvers that I did in the first video. That's one of the things about doing motor testing is that you either have to develop a rigid flight in order to get more data. It's not really data, it's visual representation, I guess, is the best way that I can think of putting it off the bat. But I just go out and I fly them. I don't fly them one time and try to do the same thing over and over again. I go out and just fly them and see what happens. Maybe I get lucky and some magic happens or something funny happens or fun, because that's what I love about FPV is even a crash can be fun. Hurts our wallet, but it can oftentimes bring a smile. So there's a lot of different flight stuff in here that you can look at in order to draw your comparison of how the motor handles different props, and that's what I hope to bring to you by testing out different props, different sizes of batteries, and showing you as much as I could without making it a long, super boring video. And if I have done that successfully, please hit the thumbs up, right? We like videos, we should click the thumbs up button to show our like for the video. It's really okay. I think it's interesting that the thumbs up and the thumbs down is still there because I don't think YouTube really cares about that stuff anymore. They might have 10 years ago, but I don't think they do much anymore. It's supposed to show engagement, right? Well, I don't know. I don't buy into that stock much. But we've got a couple minutes of flight footage here on both those props on 2S, and I think this motor is going to take we may see another super light 2-inch prop out there. Now, of course, I didn't go scouring the internet looking for every 2-inch prop to test every 2-inch prop. So if you have found a 2-inch prop that is lighter or has a different pitch profile or something that makes it easier for a smaller motor to spin than these gym fan props, yeah, it could be very, very viable. It's not bad on tri-blades. I just noticed with my flight style that there's a difference that makes me want to go 1102 on a 2-inch tri-blade. I'd like to also thank Toto FPV. I think he was doing some advocating or recruiting with RCM Power to make sure that some people who he wanted to see fly maybe get their hands on a few sets. The only thing that could make it better is if it were blue. RCM Power, make an all blue motor with
slower trajectory for talent growth.
Where the possible is, that's very different from where we were 4 years ago, where the answer to any question was no. Now the answer to any question is yes, maybe, and so CEOs are looking forward. That's a very, very constructive environment for our business.
The stock market here regaining the IPO crown last year, and essentially on the back of all these IPOs in the tech sector. A lot of them, really, the big gainers have been the infrastructure and the not necessarily the applications or the large language models. They've been essentially the hardware players, the chips and the like. Do you see a sustainability of this pipeline from China of AI?
If the environment continues to be constructive the way it is now, yes, I think it'll be a very good year for IPOs over here too. I think there's a lot of pent-up capital markets activity because we really, coming out of the pandemic, we kind of shut down capital markets for a period of time. You got a more conducive regulatory environment. You've got a good detente in U.S.-China with a constructive setup in 2024 for more constructive dialogue. I think all that's conducive for more IPO activity here in Hong Kong. I think you're going to see more IPO activity in the U.S. and Europe. So it's a pretty constructive setup. Now, of course, if there was a big exogenous event, it could slow it down. But I don't think that's the base case. But that doesn't mean we won't have some speed bumps along the way this year.
I think Wall Street shed about 10,600 jobs in combined, the big banks, last year. Does 2026 look like that as well? I think that was the most since 2016.
I don't have a view on Wall Street overall and its headcount. You know, I understand our headcount plan.
Yeah.
And, you know, all we've said publicly is it's probably a little bit more constrained in 26 because we see opportunities for efficiency and we're trying to deploy those. But ultimately, we've also said those efficiency opportunities give us more of an opportunity to invest in parts of our business where we can scale growth. And some of that growth scales with additional headcount. You know, I point to our wealth management business, which scales with people all over the world.
Goldman Sachs Chief Executive David Solomon speaking to us exclusively. Now, Puma shares are surging after the news that China's biggest athletic apparel seller, Antasports, plans to buy a 29% stake in the German brand. Well, joining us now for more is Bloomberg opinion columnist Andrea Felsted. So, Andrea, thanks so much for joining us. Why has Antasports pursued this deal now, and how could this benefit Puma?
Well, it was clearly available. Some equity was still clearly available from the controlling family. The shares had, really slumped, so it was clear that Anta would have to pay a big premium, which it has. Now, the really interesting thing is Anta clearly wants this because the big trend in China is outdoor hiking, running, the whole Gorp core aesthetic. But Puma doesn't have a strong position in this. Puma's strength is really like fashion sneakers, and that's a bit of the market that's really under pressure from a shift to dressing up again and moving into proper shoes and more tailored outfits. Puma's really in not a great position.
So switching to the luxury sector, what should we look out for in LVMH earnings later today?
It's really how China's doing. China's stabilized. It's not been getting any worse, but it's not really getting much better. So we need to get a sense of, perhaps it is improving. Similarly with the US has been very strong, correlated with equity markets, but obviously we've got quite a lot going on out there. Is that going to put any brakes on the US? And if we cast our minds back to a year ago in the wake of the US election, that seemed to unleash a bit of a spending boom for the luxury makers. It all came to a halt in April with tariffs, but they're also up against, tough comparisons with a year ago.
So, staying with LVMH, what's happening with cognac producers and brands like Hennessy?
Well, they're having a very, very tough time, and the key to watch with LVMH, I doubt anything will be announced tonight, but the key to watch with LVMH is there some kind of corporate activity on its drinks division? Does it buy the minorities and spin it out? Does Diageo buy the shareholding that it doesn't own in Moët Hennessy? So they're all the questions to ask relating to LVMH drinks business.
Andrea, thanks so much. Bloomberg Opinions, Andrea Felsted. Now, coming up, we'll be joined by the Chief Executive of IQM Computing, Quantum Computing. We'll discuss the tech landscape as American rivals IonQ buys its own chip foundry. That's next, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
For you to build a digital Fort Knox, that gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insights with Haslinda Anand, only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Now, the U.S. quantum computing firm IonQ has agreed to buy chip maker SkyWater in a deal worth around $1.8 billion. The agreement gives IonQ access to a large U.S.-based chip foundry, allowing it to speed up development of its own technology and boosting its appeal to U.S. customers in sensitive sectors like defense. Now, it raises the question of Europe's role in the field of quantum computing. With us now is Jan Goods, Chief Executive of Finland's IQM Quantum Computers. Jan, thank you so much for joining us. Look, it's an exciting time. So, first of all, what makes your approach to quantum computing very different from competitors in the US and China?
So with IQM, we actually use a very vertically integrated approach to build quantum computers. This means we run our own chip factory, we run our own assembly line, we run our own data centers, and with this, we bring the most performance quantum computers out there to big data centers to build ecosystems around the world.
I mean, do you see quantum as critical to European sovereignty? Would you ever sell to a US competitor?
Well, quantum is a critical technology because of its application also in security, defense, and in many other industries. But it is a global business, both on the supply chain side and on the market side. We have been selling to the US one of the biggest supercomputing center. Oak Ridge in the US is running on an IQM machine.
So how close are we really to top practical, fault-tolerant, quantum computers?
It is a journey, and we are on the way. We can build computers that work today, but they still make errors, as you rightfully point out. And the use cases will not all come at once, but they will be unlocked time after time. Like in AI, we see this with the GPUs. First, they were designed for graphics, then maybe for Bitcoin mining. During COVID, a lot of molecular simulations, now LLM training. And it's similar in quantum. Use case after use case will be unlocked. Maybe in the next few years, we will see the first commercial use cases.
So what are the biggest technical hurdles, actually, that IQM is facing right now?
So we know the algorithms that we want to run. So the theory is clear and the proof of concepts are clear. What we now need to do is to scale the technology. This means we need to build more powerful processors. And similar like any other big chip or computer company, we are taping out a new processor generation every year, which is better than the previous one. And this means we are kind of executing this roadmap. And this is also why then we will see the commercial use cases be unlocked with each generation.
Yeah, I mean, you're in a fascinating space. When will quantum computers, I guess, move from research labs to real-world industrial use?
Yeah, so what we see now on the industry side is that companies are getting ready. They have seen in AI how fast the trains can move, and they don't want to miss the quantum train. So they see it coming already, and they're building up their teams, they're building up know-how, and they're running use cases. But the point is, with the current quantum computers, they're not yet outperforming big supercomputing centers. But you can simulate molecules, you can do optimization of train schedules, financial portfolio, all this, you can do it. But it's not yet big enough from a problem size perspective.
How many computers will IQM deliver this year?
So we are actually the company that globally has sold most quantum computers as on-premise devices.
Yeah.
And last year, we have been delivering 7 systems. And we think that this year we will do more than that.
And so how do you see, what do you see the first commercial use going to be? Is that difficult to tell right now?
Probably it's going to be in the field of chemical simulations. So quantum work, what it's ultimately good at is simulating other quantum systems. And the molecule, ultimately, these are individual atoms that come together to do something. And this is a quantum system. So we think that this will be the first use cases. And you find them in material science, you find them in pharma, you find them in battery development, for example. So this is what we think will be the first use cases.
Jan, what do you make of this IonQ deal?
Well, as a company, we have been vertically integrated since day one. We are running our own chip factory, so we knew how important it is, and we have already integrated it. And I think this move shows that we have been on the right track already for many, many years. We are running a chip factory here in Europe, and you pointed out the sovereignty aspect. So I think it is important to de-risk the supply chains and make sure we have them on different areas in this world.
What does it mean for EU competitors? So it basically, you say that it reinforces your business model, but do they become a bigger rival?
I don't know if they become a bigger rival. We don't think it's a winner takes it all game anyway. So computing, typically you see a few dominant players. And our ambition clearly is to be one of them. And I think if you look where our products are and where technology is, we are clearly there leading. But then I said, it is a race, it is a marathon actually, it's not a sprint. And we are all kind of working towards the same goal, which is to make quantum computing commercially useful. And this is why we are betting a lot on an ecosystem building approach. We are building the industry, we are developing together with our customers. And we think in this way, actually, we will tap into a huge market that is completely undefined as of today.
Does IQM need to buy its own chip foundry?
No, I said we're running our own chip
You
foundry.
already
Yeah.
have it actually,
So
but there's
it's up
nothing
and
to
running.
add, right?
So we don't need this. We are completely independent from this
Fine.
perspective.
So how much are you planning to spend on chips?
So we have just announced last year that we are expanding our chip factory. The good thing is that in our case, we don't need these very small feature sizes that you typically have in semiconductors. And this is why the investments are relatively modest. So in our case, in total, we have been spending maybe 70 million in our own chip factory, which is way less than these big foundries that you see out there.
So there's no add-ons that you need basically. You're self-sufficient, and from what you have, you can grow.
That's correct. And so the chip factory is, of course, one thing. What we also have is the assembly line. So in the end, we build full-stack computers, which contain many components. And our factory is at the moment designed to build 30 computers a year. We don't think there's any other company which comes to this capacity.
So, Jan, I mean, when you started this, how did you think about, because it's quite unusual to say, I want the whole process under what I have. Was it because of rivals? Was it because you understood the complexities better if it was under you?
Yeah, it was more that. So we have been doing, as a founding team, research in quantum for many, many years on the university side. And it was clear that if you operate in these university clean rooms, you will never reach the quality and also the quantity of chips that you need if you want to industrialize it. And this is why very early on in the beginning of the company, we made this decision that we will have our own chip factory. And now looking back, I do think it was the right decision.
Yeah, what are you most excited about? Are you thinking of IPOing?
Well, our goal is to build a sustainable business model, and I think we are on a very good path there. As that we have been selling more quantum computers than anyone else. In addition, we are running a cloud business through our own data center, but also with AWS as a partner. So we have a very solid path towards profitability. And of course, on the financing side, we will do what's best for the company. And this might be another private raise. This might be an alternative path. We're exploring all possibilities. We have just closed the funding round last year. And from this perspective, we are very well capitalized. And now we're using this position of strength to plan the next steps.
Yeah, so great to speak to you. Thanks so much for joining us. Jan Goetzer, the Chief Executive of IQM Quantum Computers. Now, NVIDIA's Chief Executive Officer, Jensen Huang, is in China, hoping to reopen a crucial market for his company's AI chips. Joining us now is Matt Bloxham, technology analyst at Bloomberg Intelligence. Matt, good morning. So what more do we know about Huang's visit and how significant this is?
Yes, I think this is his first visit of the year, and I think last year he was there 3 times. Obviously, China, relatively small part of the business now, but potentially important going forward. And so he's really there to talk to local potential buyers of their chips as the Chinese government makes preparations to allow local companies to start orders again. Obviously, the focus now is on the NVIDIA H200 chip. Which is the one generation behind their leading-edge Blackwell chip. So it's a much more sophisticated chip than what was previously allowed by NVIDIA to sell into the China market by the US, which was the H20. So I think he's there to kind of facilitate both in terms of customer demand and the kind of Chinese authorities getting comfortable with allowing those sales to go ahead.
Alibaba-backed Moonshot AI has released its flagship model. What does it offer, and is it going to be a fierce competitor to some of China's biggest AI players, Matt?
Yeah, so there's quite a flurry of new models coming out. This is all in anticipation of an expected release by DeepSeek that we all know very well. So this is the Kimi 2.5 model, which is a more sophisticated model, allows kind of complex reasoning, allows some coding capability too, and very agentic focused. And also we've also seen a release of Alibaba's main QN product too. Now that Kimi product, based on initial reaction, seems to be a big step forward, but still I think lagging behind the likes of OpenAI and Gemini's latest version. So it's a step forward, but I think probably it's going to be put in the shadows again by whatever DeepSeek's coming up with in the next week or two.
Yeah, well, are you excited about that, Matt? I know it was a year ago that, you know, the world found out about DeepSeek, but it also sent shivers around everyone's spine.
Yeah, it did, and I was certainly excited just to kind of see how far the kind of leading edge Chinese technology has come. I think in those last 12 months, we've seen a bit of a divergence between the kind of Chinese-dominated environment and the kind of US-dominated environment. So I think this is more now about not so much whether DeepSeek can displace the likes of Gemini or OpenAI, for example, in the US, but I think it's more a measure of how advanced the Chinese technology capability is, and their reducing reliance on Western technology to push forward both their commercial and military ambitions.
Thank you, Matt Zephyr. Matt Bloxham, technology analyst at Bloomberg Intelligence. Up next, it's Bloomberg Brief. They'll have a full roundup of what we can expect from the Fed, gold, and some of the market moves. This is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Thing here is understanding. These digital assets have the ability to change the payment landscape of the world, and we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Asia is at the forefront of some of the world's biggest stories. I'm Sarah Ryan in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is The Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Trade threat. President Trump vows a 25% tariff on South Korean goods. This as other nations seek trade partnership to diversify away from the United States. Shifting tone. Trump's border czar set to meet with Minneapolis Mayor Jacob Frey under mounting pressure to change course on his immigration crackdown. And earnings ramp as the global stock marching towards fresh record highs continue. All right, let's look at these futures. They are pointed higher once again today. We did see some gains yesterday. We were off our highs at the end of the session. But year to date, we're still up plenty. We're up 1.5% on the S&P 500 and more than that, 1.8% on the NASDAQ 100. So all calm on the futures front right here as we continue with the earnings ramp. All calm in the bond market as well. If we look there, yields continue to stay around the 481 on the 30-year yield, the 422 on the 10-year yield, just a basis point higher. And 358.32, sticking to this level, some kind of signal to the Federal Reserve starting its meeting that, all is calm right here. Keep things here for right now. Let's take a look at some of the other volatile assets that were moving yesterday. So we're still below 154 on the yen. Looks like nothing too much has changed there overnight. Gold still at $5,100 an ounce. That ramp continues. And natural gas futures have calmed ever so slightly. That front month contract rolls off tomorrow, Wednesday, so there's a little bit of illiquidity, but also it is just down from the really elevated levels that we have seen above 7. Do expect that that might ramp up again, though, because we're seeing another winter storm possibly coming through, at least in the United States. All right, with that volatility to watch for the next hour, let's get to some individual movers now. For that, we go to London and Chloe Melly.
Good morning, Ronnie. Insurers are in the red today as the US proposed roughly flat rates for Medicare insurers next year. This came as a big disappointment to investors and also as a big surprise, given it was thought that the current administration would be much more favorable for private Medicare plans than the previous ones. And therefore, we're seeing a big downward moves across that sector this morning, and Humana in particular down on more than 12%. Moving on to Micron, which is in the green after saying that it will invest $24 billion in Singapore over the next decade. And this is to expand its manufacturing capabilities to ease the memory chip shortage, which of course is in really high demand because of the AI boom. And therefore, we are up more than 4% in pre-market trading for Micron. And finally, Salesforce is also in the green after being awarded a $5.6 billion contract from the US Army. Will provide some of these cloud technologies to the Department of War. And we are seeing the company up about 2% this morning on the back of that contract.
Chloe, thank you so much. That is Chloe Melly there in London. She'll be back later in the hour. And also coming up this hour, we're going to be speaking to Austrian National Bank Governor Martin Kocher. And later this hour, Katrina Dudley of Franklin Templeton joins us. Stocks look for a second straight day of gains. But first, 2 decades in the making, the European Union and India have reached a trade deal. European Commission President Ursula von der Leyen is calling it, quote, the mother of all deals. She added on a post on X that the two countries have created a free trade zone of 2 billion people, with both sides set to benefit. Joining us now from Brussels is Bloomberg's Oliver Crook. So, Oliver, this trade deal, 2 decades in the making, but it might not even have been necessary if there wasn't a whole trade realignment taking place in the first place. What's in this deal?
Yeah, absolutely, Vonnie. I mean, conspicuously, it also comes a couple of weeks after another trade deal that the EU negotiated with Latin America, which had been in the works for 25 years. So, yeah, it's no sort of accident these things are all happening now, after a year of sort of Trump tariff roller coasters. But the India trade deal, this is something that Ursula von der Leyen and the European Union really want to take a victory lap on, because India is notoriously one of the nations with the highest trade barriers across the world. And what the EU is now saying is that their companies will have preferential access to that market. So I'll give you just the top line of kind of what we can expect here. They say that it will eliminate or reduce tariffs on 96.6% of EU goods that are exported to India. The EU will also eliminate in return or reduce tariffs on 99.5% of goods that go into the EU. Now, we should say that those figures are a little bit misleading, because reducing tariffs from 150% to, say, 75% is not necessarily eliminating them, though it is certainly a sort of large step forward for the European Union. And the European Union say they would like to double their trade, double their exports to India over the next 5 years. And just to give you a flavor of some of the things that are contained here, there's really things for every European country. So, for example, for the Germans, car tariffs will go from 110%. That'll come down to as low as 10%. You get wine, something for France, from 150% down to 75%, eventually down to 20%. Olive oil for Italy down from 45% to 0%. Now, a couple of notes on all of that. This is still a deal that needs to go through the European Council. It still needs to go through European Parliament and some legal opinions. And this is something also that with these tariffs, it's not just going to go into effect on day one. This will be tiered over a number of different years, sometimes 5 years, sometimes 10 years. But the broad strokes here, Vonnie, is that in this sort of global realignment that we've seen from Donald Trump, we're starting to see what the consequence of that is, and that is pushing people together, people that would not necessarily, as you alluded to earlier, necessarily have this trading relationship were it not for Donald Trump.
Speaking of which, the UK Prime Minister Keir Starmer is visiting Beijing this week. What are his intentions?
Yeah, absolutely. And I think this is sort of very, very interesting. It comes in the week of Mark Carney striking that sort of trade deal, not necessarily a free trade agreement with China, which obviously got a lot of scrutiny from the Trump administration, a lot of criticism. You see the UK doing something similar. We spoke to Keir Starmer overnight about kind of what his intentions are there. And he was basically saying that it's a false choice to say that you have to choose between the United States and between the United States and China. But I think as we see with Canada, as we see with the United Kingdom, as we see with the EU, who's choosing to trade with Latin America and India, this is all about sort of diversifying these markets. Because at the end of the day, once the United States has sort of proved itself to be unreliable, that's really only something you can do once. And the moment that that begins, all of these countries are going to look to diversify away from the United States. For the Europeans, they're also looking to diversify away from China, and they're going to try to find all of these different markets. For what I think will be very interesting, Vonnie, is that as this sort of continues to go forward, what is the Trump reaction going to be? As if the Trump administration feels that they're losing their sway on these trading partners because eventually they're diversifying away from the U.S., that could create quite a combustible situation if the American president feels that he's losing control and tries to reassert it as time goes on.
Well, so far it's not stopping President Trump issuing the threats. The latest one on South Korea, another 25%, because it hasn't been quick enough to ratify the trade deal and to get moving on investment, right, Ollie?
Yeah, that's right. I mean, so they were going from about 15%, which is the agreement that they've got signed, and he's very upset that basically the parliament has not yet ratified it. So he's now saying, okay, we're going to kick up tariffs to 25%. Now, if you look at the session for the Kospi here, I've got it here in front of me. I mean, that sent shares in Korea down basically 1%, but that session closes up almost 3% on the day. So I think that it's fair to say that for the markets, they're sort of dismissing this threat. We actually crunched the numbers, our trade team over at Bloomberg, and looked at only 27% of all the tariff threats that Trump has began since the beginning of 2024 when he came into office or when he was elected. Only 27% of those threats have actually gone into effect.
Yeah, and yet they don't seem to be losing their potency. Oliver, thank you so much. Chief European Correspondent Oliver Crook. In Minneapolis, U.S. Border Patrol Commander Greg Bovino is said to be leaving the city over the recent killing of 2 U.S. citizens by federal agents. This as President Trump signals a strategy shift in his deportation drive. Joining us now from Washington is Jonathan Tamari of Bloomberg Government. So, you could ask what's prompting this shift, Jonathan. It should be the obvious, but maybe it isn't. Maybe it's sagging poll numbers. Maybe it's just the difficulty in continuing in Minneapolis with, his commanders there perhaps overstepping.
Yeah, I think it's a combination of all these things. I think these 2 shootings that we've seen have driven down what were already bad poll numbers for the president, and immigration has traditionally been one of the strongest points for President Trump for Republicans. It's one of the first things he talked about when he entered politics, and it's been really powering to him. And when you look at the polls now, there's significant disapproval of his handling of immigration, significant disapproval of Immigrations and Customs Enforcement, which is kind of the face of this crackdown, although not the only agency involved. And I think even people in the White House realize that the handling of this second shooting and many of the false statements that were made over the weekend is just disastrous, if not morally, certainly politically. And we're seeing a change in tone, which is a very rare thing for Trump to do.
Obviously, the human element is paramount, but beyond that, there is a government funding bill. I mean, does that take away questions of whether we'll have a partial government shutdown now or not, if indeed, something changes, at least in the tone, if not in the actual execution with ICE?
I think it's still going to be a very big problem. Democrats are really furious about the way this has been handled, and there's a number of Republicans who are also very concerned about the way the investigation is unfolding, and they're calling for a truly independent investigation as opposed to what we've seen so far, where the Department of Homeland Security is essentially investigating itself. So I think Democrats are going to make some demands about conduct of these immigration raids, for the rules of engagement, the rules around how ICE conducts itself. We'll see. Senators are coming back to town this evening, so that'll be a better indicator. But I think Democrats are going to draw a hard line on this one after what we've seen.
All right, and borders are Tom Homan in Minnesota, Homeland Security Secretary Kristi Noem's rival, of course. Jonathan, thank you so much. Jonathan Samari of Bloomberg Government in Washington. Now to other top stories trending on the terminal this morning. U.S. airlines are still paring back flights as a deep freeze hampers the restart of operations at some major hubs. Delta says services at its hubs in Boston and JFK are affected. American Airlines has axed about 500 mainline and regional services. Airlines bracing for further disruptions as another Arctic blast looms later this week. Goldman Sachs CEO David Solomon says he sees a slower trajectory for talent growth this year.
Hello，大家好，今天要来教大家如何进行 ARKO 的皮带张紧度检测与调整。在猎鹰过程中，皮带过紧或是过松，都可能会影响到猎鹰品质。我们可以在猎鹰之前或是更换皮带之后，测量皮带的张紧度，并进行皮带的调整，以确保之后的猎鹰顺利。那我们就马上开始吧。我们这次准备的工具包含了 Ferguson 所。
And Puma shares are surging after news that China's biggest athletic apparel seller, Anta Sports, plans to buy a 29% stake in the German brand. The €1.5 billion deal will make Anta Sports the largest Puma shareholder. Coming up, an exclusive interview with ECB Governing Council member Martin Kocher. That's next. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We're taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. The multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Let's get right now to our exclusive interview with ECB Governing Council member Martin Kocher. Here's Bloomberg Daybreak Euro banker Lizzie Burden. Lizzie.
Bonnie, thank you so much. Well, it's great to speak to the Governor of the Austrian National Bank ahead of the ECB decision next week. Governor, thank you for stopping by in London.
Thanks for having me.
You and your colleagues at the ECB have talked a lot about how you're in a good place, but the geopolitical backdrop doesn't seem to be in a good place anymore. Of course, you had President Trump's tariff threats over Greenland. He walked them back, of course, but has all of that changed your economic outlook?
So we've received our last projection in a large exercise in December, and lots of things happened in terms of trade conflicts, in terms of other geopolitical developments since December. But we knew already in December that the uncertainty levels that we are seeing geoeconomically, geopolitically are high. So it's important to have full optionality. The monetary policy has to be able to react to any kind of risks manifesting themselves quickly and decisively. So it means having this full optionality is an asset, and we agreed that we want to have this full optionality in any direction.
But we were talking about how it feels like a year has happened in a month already. Do you think that household and business confidence can withstand this lingering trade uncertainty? Will it dent confidence at all?
What we've seen in December, and I think it hasn't changed, is that the sentiment indicators within the euro area are slightly biased upwards. We see modest growth projections. We see inflation projections in line with our 2% target. So that means that's the reason why it has been called being in a good place. But it means, of course, not that we want to be there for all time. It means conditionally on what we are seeing, conditionally on the risk environment, this is where we want to be. But we want to be able to react quickly to anything that happens.
Well, yeah, the Eurozone economy was pretty resilient in 2025. Do you not perhaps fear that the tariff impact is in the mail? It's coming at some stage in 2026?
You're absolutely right. Some of the experts predicted that there will be strong impacts on the euro economy in 2025 already. You have to take into account that some of the tariff threats have not been implemented. Some of the rules have been relaxed a bit, but uncertainty is still very high, and we've seen that last week with additional tariff threats. So yes, indeed, we have to be careful. There might be some repercussions. There might be effects on the development of the European economy coming from the very unstable international environment, especially with regard to the trade environment. But we have seen today the trade agreement being concluded between India and the European Union. So there's a clear strategy to diversify to make sure to be more resilient as a region.
Does that move the needle for growth for the Eurozone economy?
We'll see what's going to happen, but we are at a projection where we above 1% for the euro economy. It is modest growth, as I said. Hopefully, those risks that we've identified as being tilted towards the upwards, the German stimulus, the savings rate that is very high and that could reduce more quickly than expected, that those chances for economic growth are manifest themselves during the next couple of months, and then we might see even larger growth. But of course, the downside risks that we're discussing all the time, they are quite substantial, and we need a more certain outlook. We need more calm to make sure that the international economic development is better.
Yeah, Governor, when you look at inflation, the December print was actually shy of the ECB's target, and it's predicted to be slow again in the next reading. But then core inflation pretty stubborn. What for you explains that stickiness?
Difficult to say. We're looking at different things and monitoring, especially the wage development that matters a lot. We're monitoring import prices. There's a couple of aspects that influence prices directly or indirectly at the moment. But as long as we are having or seeing modest diversions from the target, I think we are fine. But if there is in any direction a clear movement and we get more and more data in that direction, then it's important to monitor it closely and be able to respond.
Well, yeah, I know you tend towards the hawkish persuasion, but if that undershooting became persistent, at what point would it start worrying you?
So the outlook that we have, there was a large projection exercise in December, is that we are returning to 2% and slightly undershoot this year, next year 1.8, 1.9. So this is really, really modest. I think what you need is a strong undershooting or overshooting and a narrative, an explanation why this is the case. At the moment, these are just small diversions from our targets.
How does the dollar weakness and euro strength on the flip side feed into your outlook for inflation?
So the exchange rate, of course, matters. Europe is a quite open continent. That means exchange rates matter, especially when it comes to the trading relationships, but also when it comes, of course, to prices, competitiveness. So all these things matter. It's a bit unclear what it means, but we've seen some appreciation of the euro over the last year. That was actually quite substantial when you compare it over the last year. On the other hand, if you compare it to the span of exchange rates we have experienced since the creation of the euro, then we are very much in the middle. So what we have to monitor now in the next couple of weeks and months is whether this appreciation continues and whether it perhaps even accelerates. But we don't see that at the moment. But of course, events that have been happening over the last couple of days, they contribute to some concern. So clearly a thing to monitor in my view.
Well, one thing that could change this, will be changing, is who's sitting in the chair at the Fed. Of course, Jerome Powell's set to be replaced. If that person is particularly dovish, I wonder where it leaves the ECB. Because one of your colleagues at the Bank of England, Megan Green, has been saying that the impact of loosening financial conditions would outweigh the stronger currency impact on imports. So if you do have a dovish Fed, would that accelerate ECB rate hikes?
First of all, I think it's important to talk about central bank independence, and it's clear that it is in the interest of the public to have an independent central bank that is able to respond quickly. And when we talk about the exact policy stance that the central bank has, then of course we're not reacting to the policy stance itself, but of course a completely different policy stance by the Fed might have spillover effects onto the inflation outlook in the euro area. And it's a bit unclear what we could expect if that is the case. There is, of course, first of all, effects on the economic development, but there's also potential effects if the stance is too loose on financial stability, perhaps. So lots of things, but it's a bit early, I think, to judge, and we'll see when and who is appointed.
So in the nearer term, markets are still pricing a small risk that the ECB cuts this year, but further out they're looking at a bigger pricing of hikes down the line. Governor, does that tally with your view?
At the moment, we're in a good place. That is exactly what has been surprising to a certain extent, given the uncertain environment that we have been seeing quite some stable inflation outlooks. That's the main target. But I think the risks that we are seeing in both directions make it unlikely that over a very long time we are able to stay where we are. That means full optionality is important, as I said, but it's difficult to say if it happens that we stay at the current rate and the economic development remains calm and some of the risks reduce. Then I'm happy, but we have to be prepared for any changes.
How much worse would things have to get for you to back another cut?
I mean, if clearly the inflation outlook is going down, so if we're going clearly below 1.8%, which is the current outlook, then we have to discuss a cut. But it's equally likely, I would say, so that risks are more balanced now, that we see a development where inflation outlooks are adjusted upwards, and then we have to think of a hike. But at the moment, we're doing fine.
Some of your colleagues have gone as far as to discount the idea of a hike this year. Would you go as far as that?
We have agreed on a meeting-by-meeting approach and a data-dependent approach, and it means you have to be open to anything that is necessary at that moment, but being very well prepared. So I would not exclude anything at the moment.
A message I'm sure that President Lagarde will be echoing in Frankfurt next week. Great to have you with us in London. Thank you so much.
Thanks a lot.
Bonnie, that was Marcin Kocher, the Governor of the Austrian National Bank and member of the ECB's Governing Council. Thank you.
Fantastic interview, Lizzie. Thank you very much. That's Bloomberg's Lizzie Burden there. Time now for your front page news. First up on the Washington Post, House Democrats set to open an investigation into Homeland Security Secretary Kristi Noem as early as next week, laying the groundwork for a push to impeach her. The Post says Democrats plan to conduct their investigation without Republicans, but they do concede they're unlikely to remove Noem in the short term, but believe launching an investigation will signal they are taking deaths in Minnesota seriously. Next up, the Wall Street Journal is reporting tax filing season will produce a cash surge around $100 billion, higher than last year's $329 billion total. And it's engineered to boost Republicans' sagging approval ahead of the midterms. The Journal says the plan has little guarantee of success. Republicans need, for example, the IRS to issue refunds efficiently, and they need to make voters know why they're getting more money. And finally, the Financial Times reporting the administration has indicated to Ukraine that U.S. security guarantees are contingent on Kyiv first agreeing a peace deal. That deal would likely involve ceding the Donbass to Russia. The FT says Ukrainian and European officials describe the US stance as an attempt to strong-arm Kyiv into making painful territorial concessions. All right, let's take a look at these markets because futures are pointed higher, particularly Nasdaq 100 futures after a day of gains yesterday. Now, the Bloomberg Dollar Index is bouncing around its lows. We have Paul Donovan of UBS saying today as trade stagnates and maybe even starts retreating, reserve status with the US dollar actually becomes less important. And we might see international investors flouting out of dollar assets in any kind of dramatic exit, but we might see them less interested in accumulating additional dollar holdings. So that's a little nuance there to the debasement trade. The 10-year yield not really going anywhere, just up a basis point to 4.22. We have silver bouncing around the base. It gave up some of its gains and now it's gaining again. It's very close to its high above 114 an ounce, right now about 112 an ounce. And gold still about $5,100. Coming up, tech leaders will catch up with Katrina Dudley of Franklin Templeton on the AI investment trade.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8? Right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more. But I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the Global Trading Day begins.
The Asia Trade, weekdays only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Trade threats. President Trump vowing a 25% tariff on South Korean goods this time. This as other nations seek trade partnership to diversify away from the United States. Shifting tone, Trump's border czar set to meet with Minneapolis Mayor Jacob Frey under mounting pressure to change course on the immigration crackdown. And earnings ramp up as global stocks march towards fresh records. And to that end, we can see it happening once again today with futures pointed higher and gaining ground now. Look at those NASDAQ 100 futures just rolling away with things. Now, Russell 2000 futures pointing to gains, but that index, while it outperformed the others at the beginning of the year, taking a little bit of a back seat, particularly to international stocks in the last few sessions. Bonds-wise, we're not seeing too much movement. Of course, the big event is the FOMC decision tomorrow. So, of course, bonds will be waiting on anything that comes out of that. Not that we're expecting any kind of a cut or anything like that, but that two-year yield firmly stuck to 358.53. And then in terms of other assets on the move, well, obviously that volatility continues. The yen did top 154 earlier, but it's back below that now, so it's stabilizing to an extent. Gold also stabilizing, albeit at highs. We're very close to 5,100. And natural gas futures, that front month contract coming off, it rolls off tomorrow, so there's a little bit of illiquidity there. And as we know, the second and third month contracts were not priced to that extent whatsoever. Silver is an interesting one today. It's bouncing around the place. It had come off its highs, getting right back to those highs now, and as we know, it's well above $100 an ounce. Let's get to some individual movers to watch now in the early hours. Here's Chloe Melly.
Good morning, Bonnie. Insurers are in the red this morning after the US proposed roughly flat rates for Medicare insurers in 2027. So this came as a big surprise given that the current administration was expected to be much more favorable to that insurance industry, and also came as quite a big disappointment for investors given that some analysts had expected an increase of as high as 6%. And so we are seeing that weakness, that disappointment reflected in those shares in that sector today. Moving on to Micron, which is in the green this morning after saying it will invest $24 billion in Singapore over the next decade. It is expanding its manufacturing capabilities so that it can actually answer to this global memory chip shortage, which is, of course, due to the AI boom. And so we are up this morning on the back of this Singapore investment. And finally, Salesforce is also in the green after being awarded a $5.6 billion contract with the US Army. And the US Army will be using those cloud technologies from Salesforce to simplify the contracting process and reduce procurement timelines as well. And so this big contract is being rewarded by the market this morning, and we are up a little bit over 2% for Salesforce in pre-market trading this morning.
Indeed, we are. Chloe, thank you so much. That is Chloe Melly there in London. Global stocks climbing towards fresh records. US stocks looking at 2 straight days of gains now after back-to-back weekly losses for the S&P 500. Joining us now is Katrina Dudley, Senior Investment Strategist at Franklin Templeton. Thrilled to have you in studio. Katrina, just a broad question first. What is the health of this market? And if we look at, say, the rotation trade, which was peaking its head up at the beginning of the year, or the debasement trade, which was also there, where do they stand?
So if I take a look at the health of the market, what we look at is breadth, and we've talked about breadth, and I think last year we were wrong. We thought that the market would broaden out, and really you saw a lot of the returns to the Mag 7, and that concentration level is at such high levels that we now think we're set up for this broadening trade. If we look across all of the GIC sectors and we look at our 2-year forward earnings forecast, it's positive across all of those sectors. And as you know, it's earnings growth that drives market. It's not so much valuations. That is actually what happened in 2025. It was the growth in earnings that resulted in the growth in the market. And we think with this broad-based growth in earnings across all of the markets, we're going to continue to see this positive narrative.
Well, so earnings season so far, and it's just starting, has been very nice, right? On top of a pretty decent earnings season last time around as well. So I'm curious, what then causes the market to be fragile? Because at the end of last year, suddenly everybody was worried about a bubble, and we saw days of massive volatility.
Yeah, so you had last year and even the years prior, it was kind of this recession, no recession, and where are we going? And I think that narrative has really tampered down. So people are very much in the camp of this is stable, it's good economic growth. We've got a lot of good trends that are supporting the market. We have the AI, CapEx, we have AI productivity. There's some of the things which I think are going to be, such drivers of earnings and such drivers of the market going forward. So I do think we have a positive narrative. It is no longer just there's no recession camp, which is going to support the market, which is that prior positive narrative. Now I think you have some really tangible drivers of earnings going forward.
Right, so you think breadth is going to be a lot more healthy, yes. But you obviously think that the AI trade isn't done yet. And I want to point to something that you've written. You say, across our equity and fixed income teams, AI-driven investment is consistently viewed as a durable support to activity, both US and global, even as non-AI pockets of the economy soften. How does that then overlay on your investment thesis that you just outlined?
So whereabouts are we looking at AI? AI is now actually impacting multiple sectors. I look at us in financial services. We are a traditional regulated business, but we are actually benefiting from the productivity side of AI. So that AI trade is actually migrating into various parts of the economy, but it's not migrating everywhere. And it's also not migrating evenly. There are some early adopters and some people that are really latching onto AI. They're forward thinking, and they're the companies that we think you should really be investing in, not just within your traditional technology sector, but across a broader spectrum. But there are a number of companies that are going to be left behind, the AI doubters, and that's why you've got to be very wary.
Well, so how do you identify them? Is it something to do with the, neo-cloud nature of certain companies? Is it to do with how companies just generally in the economy are using AI? What would be the criteria?
So what it is actually just on the boots, feet on the ground research, talking to companies and listening and hearing where they are in terms of their AI journey. So you can look, and it's not necessarily the places you would automatically go to, but you could look for a materials company, for example, investing in AI to help them with the leaching process and getting more productivity out of the same amount of rock that they're taking out of the ground. And that would be an indicator of a company that's forward on the AI curve. That's probably an investment that they've been talking about for a number of years, because these AI investments are they're long-tailed investment, and you're now starting to see that productivity starting to come through. But it is really understanding companies, understanding what they're doing and how it flows through their business model and where they're going to see those benefits.
Now, you mentioned that this is paramount to your fixed income teams as well. How are they using the AI narrative to decide what they invest in? Is it AI debt that they're investing in, or just debt of companies that use it well?
It's more about the growth narrative, and that's where we're seeing it show up in the fixed income teams, because from a fixed income perspective, this idea of how sustainable is economic growth. We've come off a year of very strong growth. We're looking at our growth forecast. We're at 2.5 for 2026. I think the market's around 2.3, so we're slightly above. So we're still continuing to be optimistic on a growth front, and that's where this AI and the CapEx narrative shows up in our fixed income teams.
Katrina, is there any possibility that we'll get some kind of a surprise tomorrow? And I don't even just mean a cut or something. I mean maybe something that's in the commentary or,
No, we really think that if I look at the betting markets, and that's, just one data point that we do, the market's not expecting anything to grow. So the market is expecting more of the same. We've been in the camp that, it's going to be higher for longer. So even if we have cuts in 2026, we think that they're going to come in the latter part of the year. We're not optimistic about them coming in this early part. So I think you're going to see these higher rates stick around. And I think the Fed narrative is going to be supportive of that. If you look at wage growth, wage growth pressure has started to abate, so that's another positive for them, because that lessens that unemployment narrative. We were concerned that we would start to see some job losses attributable to things such as AI, and I think that with that lower wage pressure, you're likely to see the Fed just sit still.
You talked in your note about international and growth holding up and productivity and so on. Where are you looking in particular internationally this year? We saw a huge run up in China, for example. We also have the yen story and the idea that maybe even a huge investment pension fund might be thinking about pulling out of US treasuries, which indicates that there's going to be plenty going on between the US and Japan in the next year.
Yeah, I think you mentioned it. I mean, the US has been a place where a lot of incremental investment dollars have gone, and I think that we're probably closer to the end of that allocation. But that doesn't mean that the US goes down. It just means we're not a source of incremental fund flows. If I look at Japan, it has been a long story there in terms of improvements in the market structure, a lot of change in how companies are thinking about returning capital to shareholders. So I think that you continue to have that long tail of the story, and then you have those incremental things such as a shift of more money into equities within that domestic market. The other parts is you're talking about emerging markets. It's an area where our EM team is seeing a ton of opportunities. China is obviously a big part, but there are a lot of other emerging markets that we just think are well set up if we look at how they've handled COVID. And I know we're 6 years after COVID, but still, what they did during that situation, I think, has set a number of these economies up well.
Such as?
I think, you can really, if I wanted to pick one, I would probably go somewhere like India, where you've got a lot of good market structure and a lot of opportunities there.
All right, Katrina, so much content. Thank you so much for visiting us in the studio. That is Katrina Dudley of Franklin Templeton. Now to a Bloomberg exclusive, Goldman Sachs CEO David Solomon seeing a slower trajectory for talent growth this year. He spoke with Bloomberg's Stephen Engel at the Goldman Sachs Global Macro Conference in Hong Kong. Take a listen.
The environment's very constructive, for our business, particularly our banking markets business. We highlighted in our fourth quarter earnings, our year-end earnings, that our backlog was again at another, significantly high level, and it moved quite positively. I think it's going to be a very constructive year for M&A activity. Could be one of the best years, if not the best year ever for M&A activity. I think CEOs feel unleashed to really invest, drive growth in their businesses. It's a better regulatory environment. They're asking big questions about what the art of the possible is. That's very different from where we were 4 years ago, where the answer to any question was no. Now the answer to any question is yes, maybe. And so CEOs are looking forward. That's a very, very constructive environment for our business.
The stock market here regaining the IPO crown last year, and essentially on the back of all these IPOs in the tech sector. A lot of them, really, the big gainers have been the infrastructure and not necessarily the applications of the large language models. They've been essentially the hardware chips and the like. Do you see a sustainability of this pipeline from China of AI?
If the environment continues to be constructive the way it is now, yes, I think it'll be a very good year for IPOs over here too. I think there's a lot of pent-up capital markets activity because we really, coming out of the pandemic, we kind of shut down capital markets for a period of time. You got a more conducive regulatory environment. You've got good detente in U.S.-China with a constructive setup in 2024 for more constructive dialogue. I think all that's conducive for more IPO activity here in Hong Kong. I think you're going to see more IPO activity in the U.S. and Europe. So it's a pretty constructive set. Now, of course, if there was a big exogenous event, it could slow it down. But I don't think that's the base case. But that doesn't mean we won't have some speed bumps along the way this year.
I think Wall Street shed about 10,600 jobs in combined with big banks last year. Does 2026 look like that as well? I think that was the most since 2016.
I don't have a view on Wall Street overall its headcount. I understand our headcount plan.
Yeah.
And all we've said publicly is it's probably a little bit more constrained in 26 because we see opportunities for efficiency and we're trying to deploy those. But ultimately, we've also said those efficiency opportunities give us more of an opportunity to invest in parts of our business where we can scale growth. And some of that growth scales with additional headcount. I point to our wealth management business, which scales with people all over the world.
That was Goldman Sachs Chairman and CEO David Solomon speaking exclusively with Stephen Engel. Now to other top stories trending on the terminal this morning. PIMCO is standing by its conviction in Japan's 30-year government bonds despite last week's rout. Fears of fiscal excess by Prime Minister Sanae Takaichi's administration wiped out $41 billion from the bond market and triggered a sell-off elsewhere. Breitling's CEO expects the U.S. to cut tariffs on Swiss watches. The watch industry was jolted in July when President Trump imposed tariffs of as much as 39% on Swiss imports. That tariff was later cut to 15%. Breitling's CEO says the levy makes no sense given Swiss watchmakers do not compete with U.S. domestic production. And the largest grid operator in the United States was granted authority to divert power meant for data centers to households, hospitals, and other customers. PJM, which serves more than 67 million people from Chicago to Virginia, sought federal approval to stave off the potential need to impose rolling blackouts. Coming up, a strategy shift. President Trump's border czar, Tom Homan, set to meet with the mayor of Minneapolis. More on that next. This is Bloomberg.
the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people,
This is the future. This is the 21st century economy.
the transactions,
It snapped up nearly $1 billion of Bitcoin.
and the technology.
We need to build a digital Fort Knox that gives people financial freedom and has a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Isn't a massive device everyone had been hoping for. But it's long overdue. In fact, Riverside suggested that this device is changing the game on and off the field. Apple just haven't released it yet. Well, it is officially here. So let's talk about what is new and how it works. First, the design remains the same. This is actually my OG AirTag, and it looks the same as the new one with a white film on one side and a polished metal cap on the other, with a removable battery on the inside. You can still opt to get different emojis or letters put on it inside for the customization. Some have hoped to see different design options or colors, maybe even like a thin wallet-style version. But the rumors have always pointed us to this. Good thing you can still opt for many of the third-party trackers that are out there. I did a whole roundup of those trackers, so if you want to learn more about those, check out the link that I put here. Before we get into the actual changes, I also want to know how many Find My items you all have. Let me
Good
know
morning, this is Big Mac Daybreak here. I'm Lizzie Vernon in London, and these are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. U.S. Border Patrol Commander Greg Bovino is said to be leaving the city of Minneapolis over the recent killings of 2 U.S. citizens by federal agents. This as President Trump signals a strategy shift in his deportation drive. Joining us now from Washington is Jonathan Tamari of Bloomberg Government. Jonathan, pressure was ramping up. We even had CEOs in Minneapolis writing a letter to Trump saying, de-escalation should be the priority. Is that what prompted Trump to finally do this, or is it something a little bit more practical, like polling numbers?
I mean, it's probably a combination of these things. I mean, having these 2 shootings in such close proximity, and in this second instance, having members of his administration make some claims and statements that were just blatantly false about it, I think has turned a lot of public opinion against the president. I think even he and some of his advisors think that this is not going the way that they want it to go. Many voters are saying that it's not what they expected, even though they want border enforcement. They strongly disagree with the tactics that are playing out here. And you're even seeing some concerns from Senate Republicans. So I think all that combination is affecting the president and causing him to pass the change tax, which is something he almost never does.
Tom Holman, borders are, in Minneapolis, has been sent there by President Trump. Obviously, Kristi Noem is, the person that's been in charge of this. Does she keep her job, Jonathan? She's obviously going to be testifying in front of many committees over the next several weeks, but does Trump keep her?
That is the big question right now, I think. That's what a lot of people in Washington are watching. Senators are certainly starting to zero in on her, calling her to come and testify, raising concerns about the way she presented the evidence that turned out to be not true immediately after this second shooting this weekend. So I think we're going to be watching. She's certainly, at a minimum, being kind of downplayed and replaced as the face of this operation by Tom Holman. Whether they go a step further, I think we'll find out.
Now, we do have a fresh tariff threat today as well. Trump promising South Korea is going to raise tariffs on their goods by 25%. I mean, do we need to take this seriously given that recent threats haven't come to pass?
Well, I think you have to always take Trump seriously because sometimes he certainly does follow through on things that he says that people say, oh, he'll never go and do that, and he actually does. People didn't think he was serious about trying to take Greenland, and clearly he showed that he was. But as you point out, our colleagues at Bloomberg have crunched numbers. Something like 27% of the tariffs he has threatened have actually been fully implemented, and even then, many of those have been scaled back eventually. So I think you do have to take it with a grain of salt, but know that there are times that Trump does push the button. It makes him a very unpredictable actor, which I think he likes, and many people on the other side of the table do not.
Yeah, you can't completely discount anything, right? Jonathan, thank you so much. Jonathan Samari of Bloomberg Government in Washington. On the East Coast, travelers bracing for further disruptions from another winter storm later this week, which airlines still cutting back flights. Bloomberg's Benedict Camel joins us now for more. So we're in the middle of earnings season for airlines, but we have all these flight cuts. Benny, how are airlines coping?
Well, today looks a little bit better. We sort of had the peak of disruption yesterday with more than 6,000 cancelled flights. If you compare that to today, we're just north of 1,000 at this point, still quite a bit. The hotbed being still on the East Coast, so places like JFK, Boston, and DC and so on are impacted. It's less the snow at this point and more the freeze, so you have a lot of de-icing activity on the ground. That's delaying operations and actually cancelling some flights, but it appears we are through the worst at this moment. We heard from Sean Duffy, the Transport Secretary, yesterday saying that he hopes things to be back to normal by tomorrow, so we'll see about that. There'll probably be some commentary today. We get earnings from American Airlines, we get earnings from JetBlue, and those are two of the airlines that were most impacted by this. Obviously, that won't feed into the earnings because that came after the numbers, the storm, but still, there'll probably be some commentary on how they dealt with the operations and what kind of lessons they learned.
Yeah, absolutely. And it was interesting to hear United Airlines talk about geopolitical disruptions hurting and their outlook for this year being that will happen more and more, right? Because United had a fantastic year in the end. They've taken delivery of more than 120 planes this year.
That's sort of been the theme of the earnings so far. If you look at airlines that have reported, Delta, United, Alaska, they all had very good numbers, but they probably also learned a lesson from last year where they went into the year feeling really good, and then things sort of fell apart rather quickly amid the tariffs and the first sort of geopolitical dislocations. So this year, they're going into 2026 with a more sort of cautious mind frame. They are aware of what's happening with Europe and the US and the dislocations there over Greenland that we just heard. So we might get similar commentary today from American.
And from Boeing as well. Benny, thank you so much. Benedict Camel, thank you. Coming up, we'll get you set up for your trading day with economic data on deck. This is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. They're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Technology is embedded in every aspect of our lives.
and laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars, Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Now, look at what's ahead today. First up, earnings from Boeing, American Airlines, UPS, United Health just out, beating on the bottom line, and General Motors also coming out a little bit today. Don't miss our interview, by the way, with GM CEO Mary Barra at 7:30 a.m. Eastern. Plus, data-wise, we get consumer confidence from the Conference Board. That comes out at 10 a.m. Eastern. So once again, let's take a look at the macro environment. We have futures pointed higher as we ramp up earnings week. We have the dollar index bouncing around its lows, so not a huge comeback in that story, but at least some stabilization, particularly with the yen. The US 10-year yield at 4.22. We have the 2-year yield still at 3.58 as the FOMC begins its meeting. And once again, I just want to point to United Health earnings just out, beating on the bottom line. It's been a tough few sessions, though, for health insurers. That is it for Bloomberg Brief. Surveillance is next.
What some of these generative AI models look like they're going to do is they're going to reduce the cost of producing content to basically zero. So that will be a multiplier effect on the things that we're already seeing, which is that there's more people producing more content and reaching more people, and there's a lot of good and bad that comes downstream from that.
I don't know if you can break down what the average person is seeing right now in terms of stuff that's AI generated versus, maybe more traditional human generated, but what's that going to look like in a year or in 5 years?
There's actually a lot of content. Too often we talk about synthetic content and organic content and never the shoe shall meet, but there's a lot of content where AI is part of the workflow, right? Like you might not even know it. It might be whatever app you're using to do color correction, might be using models to do so. Stamp tool in Photoshop in the old days to get rid of a pimple, those types of things. But that line is going to be more and more blurred. So it's going to be a little bit less like what is organic content and what is AI synthetic content and what the percentages are. I think there's going to be actually more in the middle than pure synthetic content for a while. But you will also see experiences that are purely AI, right? You see this in the last 2 weeks with Vibes in the Meta AI app and with Sora 2 from OpenAI. So I think you're going to see both.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Alim, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
It's really hard to have any kind of negativity on the U.S. market.
The setup is that it's all about tech.
Expectations right now are much higher than they've been over the last 3 years.
Just meeting earnings is not enough.
anything that looks like it's going to threaten that earnings picture is going to be problematic.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Tuesday within striking distance of all-time highs. Equity markets advancing heading into the Fed's two-day meeting as the explosive rally in precious metals takes another leg higher. President Trump is threatening to raise trade tariffs on South Korea. This time, the market isn't blinking.
So equities are just piling through, ignoring some of the noise. When you look at gold, potentially that debasement trade continues. But as we said last year, and that's continuing through this year, uncertainty is a feature, not a bug. The president is clearly annoyed that the South Korea legislature has not put through this deal. A lot of this has to do with the investment deal. Some of these companies are going to make investments into the United States. So he's coming out with a 25% threat. Does it mean we land here and end here? Potentially not. But the president is using trade and tariffs as a way to negotiate, once again.
I'm always thinking, what's new? What's new about all of this? And what's new in the last week or so is that trade partners are now looking elsewhere. The EU and India putting together some kind of free trade deal. And then we hear from the British Prime Minister, Keir Starmer, speaking to our colleagues over in London, who's not going to choose between China and the United States. And ultimately, that's a choice this administration wants these countries to make.
And it comes on the heels of Mark Carney, the Canadian Prime Minister, going over to Beijing, looking at potentially tightening some ties when it comes to the economic sphere. This is what Keir Starmer had to say. I'm often invited to simply choose between countries. I don't do that. Actually, Keir Starmer, that's a very wise decision. They're looking to China to have economic ties, even though they say this will not impede on their relationship with the United States or hurt their national security posture.
The market really is not blinking. Equity futures up by 0.25% on the S&P 500 on a 4-day winning run. Can we make it day 5? This from Max Kettner over at HSBC. We continue to put little weight on geopolitics. Seemingly, he's not alone. He says this: it's about US rates and rates volatility and near-term growth expectations. And as for near-term growth expectations, we'll speak to a range of guests this morning. They're getting higher and higher and higher.
Well, you heard David Solomon overnight talking to Stephen Angle, our colleague over in China, and he was talking about the deregulatory push that we see out of the United States, and he's talking about the fact that things are looking incredibly optimistic and rosy. You have to remember, there's a fiscal impulse around the globe, especially here in the U.S. Potentially when you have some tax refunds coming down the pipe, it is a constructive environment for a lot of individuals that are ignoring the noise, ignoring any geopolitical ruptures, and just looking through at the fundamentals and the data.
We're going to see it in the corporate earnings through the next hour or so. GM reporting later this hour. In the next hour, we'll hear from American Airlines and from JetBlue too. UPS just moments ago, this is their outlook. They now see 2026 revenue of about $89.7 billion. Compare that to the estimate of 87.95. You want to see more of that throughout the morning, Anne-Marie. That stock is up by 2%.
Yeah, they're doing very well. So they have better revenue posture going into for 2026. Beating the estimate handedly also comes at a time when people, were thinking maybe tariffs, all of this was going to damper some trade and commerce. It's not happening with UPS, which shares are now rising in the pre-market because of this. 2026 sales outlook beat big time.
A better outlook from UPS. If you're just joining us, their stock is up by 2% in the pre-market. The numbers look like this. For 2026, revenue of about $89.7 billion. That outlook versus the estimate of 87.95. The stock is higher by 2.2%. Coming up this hour, we'll catch up with Cameron Dawson in just a moment of New Edge Wealth, with stocks looking for a 5th day of gains. Kit Jukes of SocGen with the dollar very much under pressure. And George Goncalves of MUFG as the Fed's two-day meeting begins. We begin this hour with stocks within 1% of all-time highs. Cameron Dawson of New Edge Wealth looking ahead to earnings, writing with an acceleration in revenue growth, a surge in margins to new records, and a big broadening of companies who are driving earnings. The big question for 26 is, how much room is there for this normal margin expansion to go? Cameron joins us now for more. Cameron, good morning.
Good morning.
Normal. Let's get into that. Yeah, just frame how massive the margin story's been in the last 12 months.
It has been incredibly surprising, and we even would frame it as a miracle, given the fact that how much you threw at corporations over the course of 2025 with tariffs, which we know were primarily borne by corporations. We had that Kiel Institute report that said that 96% of tariffs were borne by the US consumer and corporations. So companies had to do a lot of blocking and tackling in order to just keep margins flat, but they actually expanded them in 25 by over 100 basis points. And that's without a concomitant acceleration in revenue growth, which is typically the relationship that we see. So when we boil it down, it comes down to productivity that is likely a function of a lot of investments that came out of the pandemic. And it's also a lot of labor productivity. There's a big dynamic where we have labor wage growth slowing to a material extent, which means that wages are not causing as much upward pressure on margins at the same time as workers aren't switching jobs as much. So the workers that you have are becoming more productive, and thus you get the margin expansion. The last point is, this probably doesn't have a lot to do with AI.
Why not?
Because AI is still in these test phases. AI is still in testing to see how much it could impact growth. This is not AI necessarily causing people to fire workers. It is supplementing workers. Maybe at the margin, it's causing some companies to not have to hire as many low-end workers. You can see that with college-age unemployment rising. But this is likely not an AI story of what we saw in 2025, which raises the question, is that what is baked into 26 estimates? 26 estimates have 200 basis points of margin expansion baked into the forecast for $310 a share. That to us looks like a productivity boom, another productivity miracle.
Given how you're framing this, it sounds like you think there is pretty decent downside risk here into the year ahead.
So let's think about the cadence of earnings growth through the year. 8% growth is expected for this quarter. It's coming about bang in line with that 8%. That's very different than the last 2 quarters of earnings season where you saw earnings growth come in about double what was expected going into the quarter. That 8% accelerates to 18% in the second quarter, 21% in the third quarter, and another high teens in the fourth quarter. So it's not a big thing to say that there is a high bar for earnings to jump over. It's not to say it's not achievable. There's a lot of parts of the economy that didn't experience great earnings growth over the last couple of years because of the concentration in just Mag 7. But that is still an extraordinarily high bar for this market just to meet expectations, let alone beat them.
Well, if anyone's going to be jumping over that bar, that 200 basis points in margin expansion, what kind of companies are prepared to potentially do that?
Yeah, it's probably those that have the most ability to apply AI quickly into their workforce. So those people who have a lot of workers, maybe that they're lower productivity, a lot of wage costs. But I think the big question is, can we still see the degree of margin expansion out of the tech names, which has been so extraordinary and one of the reasons why this market has levitated so much. If we look at tech companies, the Mag 7 or FANG names have grown their margins by 10 percentage points in the last 3 years. A lot of that is because they simply were able to raise prices so much. There's a lot of monopolistic pricing power for some of these businesses. They were able to cut headcount significantly. And yes, you had some benefit and boost from AI, but it really was more the good old-fashioned blocking and tackling of margin expansion, not necessarily this big step change function and technology yet.
Honeywell was talking about physical and AI and how pilot projects are now being spread out to actual adoption. Is this going to be the theme for this year, if you're able to adopt in physical AI?
I remember going to a Honeywell Analyst Day probably 10 years ago, and they were really excited to roll out this VR system in order to fix pipelines. The reality is that a lot of these technologies have been being rolled out for quite some time. We used to call it big data before it was AI in industrial land. And so what you've seen is these kind of normal sort of margin expansion that is typically then passed on through to customers, not necessarily driving big upside to the margins that are experienced by the business.
It really sounds like you're not buying the hype around the AI story. Is that a fair characterization? That's what I'm feeling, just sitting here listening.
I think that the productivity from the actual application of AI is going to take longer than people are expecting. That's very different than the benefit you're getting from the build-out of the infrastructure of AI, which we can see the earnings benefit immediately. You can look at it in the nuclear names, you can look at it in the power generation names, you can even look at it in some of the commodities, of course, the semiconductors, the memory stocks. That's the immediate benefit. The actual benefit of the application, that broadening benefit of it, I think that still remains the question of when it will come and if it will come as quickly as what's being priced into 2026 earnings.
Cameron Dawson of New Edge Wealth is going to be sticking with us. We'll explore some of these themes in just a moment. Big 48 hours coming up for Big Tech when we start to get earnings from Meta, Microsoft, and the others all report out of the next week or so.
I love what Cameron was saying, though, how a lot of this has already been happening in terms of the physical AI world. Actually, it's just been called big data. Now they're just rebranding it, it sounds like, with some C-suite seats.
Futures positive this morning by about 0.25% on the S&P 500. With an update on news worldwide with your Bloomberg brief. Joining us now is Yahira. Hey, Yahira.
Good morning, John. UPS shares are higher, up 4.5% in the pre-market after the shipping giant's fourth quarter earnings exceeded estimates on the top and bottom lines. For the full year of 2026, UPS is expecting revenue to be approximately $89.7 billion, beating Wall Street expectations. The outlook marks the first time in a year that UPS has provided full-year sales guidance. Meanwhile, UK Prime Minister Keir Starmer says he won't choose between the US and China as he flags significant opportunities for British businesses ahead of his trip this week to Beijing. Starmer told Bloomberg he can meet President Xi Jinping without angering Trump or harming relations with the US. He is scheduled to travel to Beijing next week. And U.S. Border Patrol Commander Greg Bovino is leaving Minneapolis following public outcry over the killing of 2 U.S. citizens by federal agents. The White House says it's dispatching Border Chief Tom Homan to the city to ease tensions. President Trump also saying he's considering independent investigations into the shootings. That's your Bloomberg brief. John.
Hey, Yahira, thank you. More from Yahira later this hour. Up next on the program, ongoing trade tensions.
Canada doesn't live because of the United States. He spoke to Prime Minister Carney, who was very aggressively walking back some of the unfortunate remarks he made at Davos.
Up next, we'll catch up with Bloomberg's Tyler Kendall, live from New York City this morning. Good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Know how the market day started.
Find out how it finishes.
Public markets to private markets,
From the micro to the macro,
covering retail, entertainment, the business of sports.
the supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld,
And I'm Romaine Bostic, and this is The Close.
live every weekday.
Only on Bloomberg. Context changes everything.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
Very good question.
Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Big morning for earnings coming up. This is what it looks like. Later on this hour, we'll hear from GM, General Motors, around 6:30 Eastern Time. In the next hour, American Airlines and JetBlue. Boeing as well. Moments ago, we heard from UPS. Check them out in the pre-market. Their stock is higher by about 2%, almost 3 percentage points higher now. Heard from the company moments ago saying the outlook for 2026 revenue looks like this: $89.7 billion. The estimate was $87.7 1.95. So that's an upside surprise and a beat for the outlook from UPS. UPS traded higher by 2.8%. The broader equity market doing okay as well, coming off 4 days with no losses on the S&P 500. Can we make it day 5? Up by 0.25% on the S&P 500. On the Nasdaq, up by 0.6. Under surveillance this morning, ongoing trade tensions.
Canada doesn't live because of the United States. Canada thrives because we are Canadian. I was in the Oval with the president today. He spoke to Prime Minister Carney, who was very aggressively walking back some of the unfortunate remarks he made at Davos.
So here's the latest this morning. Tensions remaining high between the US and its allies after a call between the president and the Canadian Prime Minister. The president also threatening to raise trade tariffs on South Korea, saying the country is not living up to its end of the trade deal. Bloomberg's Tyler Kendall joins us now from Washington for more. Tyler, just to pick up on the Treasury Secretary words, the Prime Minister of Canada was, quote, aggressively walking back some of the unfortunate remarks he made there at Davos. Was he?
Well, at this point, John, what we've heard from Prime Minister Mark Carney is that he's not pursuing a free trade agreement with China, which is what we've heard this administration ask Canada not to do. So at this point, it's not totally clear exactly what the Treasury Secretary was referring to in this private conversation between President Trump and the Canadian Prime Minister, though it does appear to be an opportunity for perhaps some de-escalation from the Trump administration's threats. Because, John, ultimately, what we've seen over the past few weeks has just been a re-escalation of potential upgraded tariffs, even if that ultimately means that the administration walks it back, right? We have this 100% threat on the table against Canada. We also saw renewed tariff threats against those European allies who have rallied support around Greenland. And now we have this threat against South Korea. And while perhaps we knew that the tensions were escalating there, for example, I had reporting on the terminal just last week that there is a growing unease in the U.S. with how South Korea is allegedly treating U.S. tech companies. This is a clear escalation on the Trump administration's part, but our own analysts at Bloomberg Economics say that the threat likely won't go into place. This is more about applying external pressure for a domestic outcome to speed along the approval of the package agreed upon between the two countries in South Korea's parliament. Now, John, of course, we're watching closely what these potential impacts could be, not just from the administration, but how our allies are now looking elsewhere. Of course, you have Carney striking this trade deal with China, but then also worth mentioning, new this morning, the European Union striking a huge trade pact with India after nearly 2 decades of negotiations. There are definitely questions here about what perhaps spurred that timing.
Tyler Kendall down in Washington. Tyler, thank you for jumping on for us. Think about the objectives of these tariffs: bring manufacturing home, national security, raise revenue, all of that. The other one we've talked about consistently is to get China to change its economic model. And if Sir Keir Starmer, the British Prime Minister, is speaking to Bloomberg over in London and saying we're not going to choose between China and the United States, that just tells you how difficult this is going to be.
It's incredibly difficult. And then also, to Tyler's point at the end there, what do you think spurred this last minute trying to get it over the finish line after 2 decades of negotiations between Brussels, which nothing moves quickly there, and India? It's likely this pressure by the President of the United States. You know what also is interesting? Bloomberg Economics did a study. Only 27% of Trump's tariffs have actually been enacted. So this is why it is so hard sometimes for the market to understand what is real and what is just negotiated.
Still with us around the table, Cameron Dawson of New Edge Wealth. Cam, do you just look through a lot of this now and ignore it? Can you just ignore it?
Yeah, embody the spirit of the Kospi this morning. So the Korean stock market is now actually up after those threat of tariffs. And I think the question that we have is that if everybody's expecting a taco, do we actually not get one? Because it's a classic boy who cried wolf scenario, which is that you warn of something, it never happens. And then when it's too late, it actually does happen. So the question is, does this lack of market reaction actually push Trump to potentially talk about even further tariffs or follow through on them to get that 20% number of tariffs that are actually completed up higher?
I'm trying to keep up. We did get higher tariffs last year.
We did.
It didn't show up in the data in the way people thought it would. And I wonder how much comfort investors and economists are also taking from that coming into 26.
And I think it's fascinating that you have a company like Amazon starting to come out and saying, just now we're starting to see the tariff impact because of all the inventory dynamics and inventory pull forward. And maybe the greatest folly for forecasters in 25 is that they thought tariffs would be the equivalent of shutdowns, Right, shutdowns impacted the market immediately. They impacted earnings immediately. But the reality is that because of all the steps that supply chains go through, because of all the preparation in advance, tariffs simply weren't passed on immediately to consumers. Now, there's pockets of areas where we've seen tariffs impact consumer prices, but when you put it into the grand context of broader CPI data, it's not moving the needle as much as people expected.
Cameron, you talked about how 96% of tariffs were borne and paid for by U.S. companies. I know you have thoughts about IEEPA. We are still waiting for the Supreme Court ruling. Likely it's going to happen maybe the earliest, the end of February. How do you think the market is going to react to that?
Yeah, I think the question is, will the equity market likely cheers because it effectively is just a flow through down to the bottom line, boost margins even more. Maybe that's how we get to 200 basis points of expansion. I think the more fascinating point will be how the bond market reacts, because the bond market having this extra tariff revenue has certainly allowed it to not have to issue as many treasuries as many people were expecting. It's made deficit statistics look a lot better. So if you actually were to see a reverse of this, you could have even more funding pressure. And then the question is, does that move yields up across the curve? And is that something certainly that we know Treasury doesn't want?
Do you think it's knee-jerk, or you think actually some of that could be sustainable?
In the bond market reaction? Yeah, I think at the end of the day, we think the bond market is simple, that it just follows effectively economic surprises in the US, at least for the 10-year. And so if you're in an environment where you have a release of tariffs and you have a little bit more funding pressure, yes, we would expect bond yields to move higher in that scenario, because it could be effectively growth positive, but funding negative for the Treasury.
What if we're in a government shutdown at the same time?
Yeah, there's the big question, because the yields probably were lower in the fourth quarter of 2025 because we didn't have economic data, because we weren't getting those economic surprises to move yields one way or another. I mean, I think stepping back, we have to appreciate that Atlanta Fed GDP now is at 5.4% for the fourth quarter. We printed nominal GDP at 8.2%, and yet the 10-year Treasury yield is effectively just flat. So again, we would think probably lean towards upside surprises on that front.
Total snooze. Volatility so subdued, tens at 422. And given, throw in the mix, what's happening in Japan as well. JGB market exploded last week. And I think it's fair to use that language when you see a 20 to 30 basis point move at the long end.
Yeah, and the wild thing is that the MOVE index, that Bank of America bond market volatility index, was actually lower on the week last week. So we saw all of this movement, and I think it's important to appreciate bond market volatility being low is good for overall market liquidity. Meaning that in order for valuations to stay at high levels, in order for credit spreads to stay tight, you need bond market volatility moving lower. And that's been a powerful market driver over the last 3 years. And if that were to turn in the other direction, that would be liquidity negative and likely usher in more volatility for risk assets.
I wanted to finish on a midterm risk. Let's just finish on that. So in November, we get the midterms. The president's polls right now, Republican polls, are not heading in the right direction. That's a problem for them. When the president's finding himself in this position, he's leaning on quite populist policy proposals. Is it making some sectors less investable than others right now as you look across the equity market?
Well, my colleague Brian Nick has been joking that probably the #1 policy priority for 2026 is don't let the stock market go down. Because if you think about how important the stock market has been to the US economy and fueling that upper income, spending growth, having a prolonged period of stock market volatility, which does typically happen in midterm years. Don't forget, midterms give you the best earnings growth, but typically the worst equity market returns. So it's this paradox that we could find ourselves where the policy from Trump and trying to be able to push markets higher might just be pushing on a string simply because of this midterm election dynamic.
The proposals on the table right now are certainly not market friendly. The president's going after stock buybacks in certain sectors. The president's going after investing in housing. This is all things that people might want to hear in the electorate. The president's going after capping interest rate costs. That's not going to help the financials. And some people might make the argument it's held them back over the last few weeks.
Absolutely. It's populist policies, like it is in any election year, like we saw in 2024. We're seeing it again this year. And not all of these, depending on the industry, is good for them. When you look at what's going on with the defense sector, you look at what's going on with the home builders and housing, and you know what? We're probably going to hear a lot more of them tonight because the president is giving an address in Iowa.
Does the president care about the equity market in quite the same way coming into this year? You're making the case that he does, but I'm questioning whether that's actually real or not. I don't think you introduce ideas like capping interest rate costs if you care about the stock market.
Well, I think the key difference is that everybody talks about the Trump put. a put is rarely priced at the current price for its strike price, meaning that the Trump put is certainly lower than it is today, where stocks are trading today. However, if you were to see a period of deeper and more protracted equity market kind of volatility, this would be very negative for higher income growth and spending. That's been the key driver for the US economy, so I don't think it would be something that would be tolerated for very long. Question is, does it work with whatever they're trying to do to fix it?
When you talk about his put price, you're basically saying he has a higher threshold for pain this time around.
Well, and I would say that the other point of it is that maybe in equity markets, possibly, it's really the bond market. It's that yippee bond market that gets him to act. And that if you were to see bond yields spike up higher, that's likely the thing that causes a reverse course in some of these policies.
No yips right now. Cameron, good to see you. Cameron Dawson of New Edge Wealth. Bond yields higher by about a basis point, 10s at 422.
Snoozy. I mean, it's not where the Treasury Secretary would like to see, but he's certainly not going to be upset at this because, as you said, there's not been a lot of volatility here.
Closer to 4 than to 5, and I'm sure the Treasury Secretary would take that given what's happening elsewhere. Coming up on the programme, we'll catch up with Kit Chooks of SocGen as traders bet big on a deeper dollar sell-off. Plus Danny as your morning movers. Health insurers sinking on proposed plans for Medicare payments. We're down across the board. That conversation up next. Live from New York City, you're watching Bloomberg TV.
Wow.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in DC that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield back on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We're taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Alam, only on Bloomberg.
No losses on the S&P 500, the longest steady stretch of the year so far. Yesterday, though, notable, the first back-to-back losses on the Russell, the small caps, for 2026. This morning we bounced back by 0.3% on the S&P, up by quarter, on the Nasdaq, up by 0.6. That's the price section. Let's get you some morning movers with more. Here's Danny. Hey, Danny.
Hey, John. Shares of health insurers tumbling in this morning's trade. United Health, CVS, Humana, all down at least 11%. We have the new plans from the government on payments for private Medicare plans, and they are keeping them flat, or almost flat, 0.09%. Just to underscore how much of a disappointment this was, some analysts were projecting as much as a 6% bump. So shares tumble off the back of that. Elsewhere this morning, the memory chip stocks having another good morning, something we're used to. Micron specifically outperforming up nearly 5%, announcing plans to spend about $24 billion in Singapore to help ramp up its production of memory chips. It's something that we know that there is a shortage at the moment, so those shares moving higher. Finally, Salesforce, those shares also up 2.2% to the pre-market this morning, getting a $6.5 billion contract with the U.S. Army. The idea is to help adopt more commercial licenses for the U.S. Army. It is a 10-year contract. That's sending shares higher in the pre-market, John.
Danny, thank you. More from Danny in the next hour. On a radar this morning, the British Prime Minister, Keir Starmer, saying the country can balance ties with both the US and China. Starmer telling us here at Bloomberg, ahead of his trip to Beijing, he's prioritising economic growth and remaining firm on national security. Elsewhere, President Donald Trump threatened to raise tariffs on South Korean goods to 25% from 15%, blaming the country for stalling a major trade deal. New rates would be targeting essential sectors, including autos and pharmaceuticals. And finally, just moments ago, General Motors earnings just crossing their stock in the pre-market is down about 1.67%. Here's the outlook for them. They see 26 adjusted EPS in a range of $11 to $13. The estimate was $11.79. Also in the mix, approving a new $6 billion share repurchase authorization, the latest from General Motors.
Yeah, stocks are lower even though they do have a wider barrier when it comes to the adjusted earnings per share, when it comes to General Motors. They also seem to be doing well when it comes to international. Also, I thought this caught my eye, Jonathan, introducing conversational AI with Google Gemini. How many more companies are we going to see decide to pick which AI player they want to start to team up with?
Got a number on tariff costs. The companies have been pretty transparent about a lot of this. Gross tariff costs of $3 to $4 billion. That's real money.
That's real money, and actually what comes to my mind is just the idea that USMCA is going to be renegotiated this year, and a company like GM is going to be one of those companies that is going to be stuck in the crossfires between Canada, Mexico, and the United States, because we know how many times does an auto pass a single border when it's being produced.
Stock all over the place at the moment, just turning mildly positive by about 0.8%. Joining us now is Bloomberg's Craig Trudell. Craig, welcome to the program. Let's get into some of these numbers. What stands out for you?
Yeah, I mean, I think it's more of the same from GM here, where they've really been executing with sort of the old school technology, the great big pickups and SUVs that has long been, their sort of calling card. And we've seen sort of slow and steady progress on the electric vehicle front until recently. I think we've seen some concerns, of course, about just how much that unwind will be disruptive for the Detroit automakers, both GM and Ford. And yet, I think GM was much better positioned than Ford in terms of having the scale to where its electric vehicle business is less of a loss-making aspect of the company. And so while we'll see some dialing back of production of those vehicles because of a sort of less receptive environment, it's going to be less dramatic than what we've seen at Ford. And meanwhile, just more and more of these trucks and SUVs that are their specialty, the demand for those have been incredibly strong.
Craig, they just missed where the consumer was going to be. You and I have been talking about this now for a number of years. Do you think we're overstating the importance of the EV credits? I know they're material, but Craig, ultimately, Was that the direction of travel anyway?
Yeah, I think, the going away of EV tax credits is a huge deal for certain manufacturers. I mean, the Teslas and Rivians and Lucids of the world that are entirely, tied to the battery electric vehicle market. This is hugely problematic for them in the U.S. And I think what we're going to see from GM is, some changes in terms of how many of these electric vehicles they make in the near term because of those credits going away, because of other forms of support, falling by the wayside. Also, just less pressure from a regulatory perspective, where fuel economy and emissions regulations have been gutted, and so they're able to just kind of keep ramping up that truck and SUV production, and Americans are able to buy as many of those as they wish.
Stock is recovering now. The stock is higher in the pre-market by about 4.5%. The next hour, Craig's going to come back. Craig, appreciate your time. But also be catching up with, of course, Mary Barra, the CEO of General Motors. So look out for that conversation later on this morning, 7:40 Eastern Time. You can make the argument, Anne-Marie, many people have, that the transition to EVs in this country specifically, was stalling long before the conversation about the expiry of EV credits began.
Right, and part of that was also just because the build-out was not there in terms of where you can actually, unless you had it at your house, where you can actually recharge your car. What's so interesting for a lot of these auto executives is the fine line they have to walk, and they're getting some from the Trump administration they absolutely love. What Craig was just talking about when it comes to the fuel economy regulations, and some of that being easier on these auto spaces, especially when they build these big SUVs. At the same time, if you put a ton of money into electric vehicle space, those subsidies evaporated, and there's less of a push from Washington, D.C. to continue in that space.
Stock is up this morning by 4%. Let's turn to foreign exchange. The Bloomberg Dollar Index falling to its lowest level in 4 years. Kit Jukes of SocGen writing, what will determine how the dollar performs will be the strength of the economy. We will have a much clearer idea of where we are headed by mid-February. Kit joined us now for more. Kit, welcome to the program. We saw a lot of this price action in the first quarter of last year. Then the trade kind of stalled, at least for DXY. Kit, what's happening now?
I think now it's a straight fight between the sense, though, and the awareness that the U.S. economy is still doing better. Consensus growth forecasts moving higher for the U.S. And then all the noise around a president who would like a weaker dollar, a sense of that, and concerns about what policy might do, or will the equity market hold up, and the conversation you've just been having. And so we're in a range on euro-dollar, and then we're looking at other things that, Australian dollar is very fashionable. The yen is very difficult because they would like to get it stronger. So we've got lots of noise, but the underlying theme on the dollar is one of conflicting forces. Which wins, growth or policy?
Well, Kit, let's pick up a currency pair. Let's take euro-dollar. Let's discuss whether the Europeans are willing to embrace the euro strength that might come with that dollar weakness. Already one European Governing Council maker of the ECB, Governing Council member, coming out this morning and almost pushing back against the euro strength we've seen over the last 12 months or so. Can they live with euro-dollar above 120?
They could live with euro-dollar above 120, provided everything else behaved in the sense. So, we've been up above 120 twice in the last few years and held there for a bit. But the difference this time is that with other currencies, things like the yuan staying cheap, the yen obviously cheap at the moment, the result of that is the trade-weighted euro is stronger than euro-dollar looks, if that doesn't sound silly. And that concerns some of them. I think we could get to 120 because it's close. I think 125 is going to be a real reach. I think anything above that's impossible. I have a forecast of a peak at 120. January the 1st, I wish my forecast was lower. I didn't think we'd get there. Today, I think I might have been right. But that's just luck and stupidity. But we're not that far. The euro is, Europe doesn't have that much growth, doesn't have an inflation problem, doesn't need a currency that gets strong. They'd be much happier if the Chinese would let theirs go up 30% and make life easy for everybody.
Well, do you think that's going to happen, Kit? Exactly. That's the problem. So, Kit, if you want to play this dollar weaker story, what are you playing it against in G10?
Well, that's the trouble is people who want to play it, there are two places you can play. One is you have to believe that the US is going to get a deal with the Japanese that will persuade the yen to rally. And I think everybody's on board for that. But the debt sustainability concerns of the size of Japanese debt is a real problem. So it makes everyone nervous. And the other one is the high flyer of the currency world at the moment is the Australian dollar. there's a chance they get inflation numbers tomorrow that make a rate hike look really likely. And so they're moving in the other direction from everybody else. They are insulated to some degree from a lot of the geopolitics at the moment. Australia's a long way from everywhere in that sense. That would be my bet for what comes out as the winner over the next 3 to 6 months.
Well, Kit, isn't also just gold individuals that were holding dollars? Are they just moving potentially to put more into their gold holdings?
Gold wins everything. I'm not going to short gold. There's a correlation between gold and the Australian dollar that kind of has some sense to it, but that's not really the big driver. There's much more to the Australian economy than that. But yes, but the story of the last year is that if people are unsure which currency to own, shiny stuff makes sense.
Also, we've seen the Swiss franc also be a place that people are flocking to. Is that something you think that is keen on and a good idea?
It sort of, at the beginning of the year, it was performing badly. Then it came back in this last bit of volatility in markets. It is a safe haven. It is very expensive. It is in the middle of a tariff disagreement with the United States. They're going to suffer on some of that in the short term. And they have amassed, they have intervened a lot to prevent the currency getting more expensive. The result is the National Bank in Switzerland owns a lot of US tech stocks, which is an interesting outcome. But I think, it can go up. Again, it can't go up as fast as gold.
Gold, that word, haven and gold. Kit, I just want to finish on that. Typically, that would mean a bout of risk aversion, but that's not what's happening here. The correlation between gold and risk equities and how risk assets have outperformed has actually been really interesting to me, Kit. What do you think explains that, this regime where gold performs alongside risk?
I think partly it is a general sense of we don't trust fiat money in the same way, or there's people concerned about policies. It's a reflection of the massive uncertainty out there. It may also come back to your conversation of, the US economic cycle is reliant on the US equity market just keeping on going. And people are looking and say, is that healthy? Can it still? Is the valuations are high? We're feeling uncomfortable. Is the president going to make this more difficult? So there's a nervousness around there, and I think it just means that at a time of yes, rising equity prices, yes, risk on in one sense, and yes, low volatility, but historically very high uncertainty economically and geopolitically, people are trying to. They're just falling in love with a very old-fashioned solution to that problem, and it doesn't take that much buying to make the price of gold go up.
Kit, good to see you. As always, Kit Jukes there, SocGen Gold up by 1.5% in today's session. Let's give an update on stories worldwide with your Bloomberg Brief. Back with us, here's Yahira. Hey, Yahira.
Hi, John. Shares of GM are rising 5% in the pre-market after reporting results. For the full year 2026, GM is expecting EPS to come in between $11 and $13, exceeding Wall Street estimates. GM also approving $6 billion in share buybacks. CEO Mary Barra saying, we are operating in a U.S. regulatory and policy environment that is increasingly aligned. She will be joining us at 7:40 a.m. Eastern. Meanwhile, JetBlue shares are falling nearly 4% in the pre-market after reporting wider than expected losses per share for the fourth quarter. The airline forecasting capital expenditure for the first quarter of about $200 million, lower than what analysts were calling for. CapEx for the full year is estimated to come in at about $900 million. And Goldman Sachs CEO David Solomon says he sees a slower trajectory for talent growth this year, but made an upbeat call on global markets.
I think the economic setup is pretty constructive, especially in the U.S. But broadly, I think it's relatively constructive. You've got a confluence of lots of stimulative fiscal policy in developed economies. You have a general deregulatory trend and tone, both in the U.S. and Europe.
Solomon also touted the strong relationship between Goldman and the White House, saying he appreciates that the Trump administration is, quote, open for business. Dr. Bloomberg Brief. John.
Yahira, thank you. Appreciate the update. David Solomon, constructive. Ted Pick, amped up. Brian Moynihan looking for GDP close to 3%. That's a pretty good outlook from the world's biggest bankers.
Definitely. And it was interesting because Stephen Angle did push back and say, didn't in August the president say you should stick to DJing? And, he quipped. He said, I like DJing. He's, look, this is part of the noise that you're amplifying. and you got to stick to what is working with this administration. We share ideas out in the open. We don't like something, we can be vocal about it. Sometimes it gets out in the press. That's not helpful. But when it comes to the deregulatory push in this administration, they certainly don't mind.
A great exchange with the Goldman Sachs boss over in Asia. Up next on the program, balancing the dual mandate.
Ultimately, there is this tension that the spending data has been reasonably solid, but it's the employment data that has been soft.
We'll get into that tension in just a moment with George Concalves of MUFG from New York City. You're watching Bloomberg TV.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked. And we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. When I started to realize what was happening, it was 12 years, and we haven't done it.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about significant risk transfers to find space in their balance sheet.
Hedging some of that risk. You could look at it the other way. Obviously, this stuff is risk weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlinda Amin in Davos, Switzerland, and this is Bloomberg.
Stocks are doing okay, positive by 0.3% on the S&P 500. On the Nasdaq 100 so far this morning, up by 0.7. A big 48 hours for big tech just around the corner. At the Savannahs this morning, balancing the dual mandate.
Ultimately, there is this tension that the spending data has been reasonably solid, but it's the employment data that has been soft. They're in a holding pattern given the strength of the economy, waiting for inflation to decisively start to move back down towards target.
So here's the latest this morning. The Federal Reserve kicking off its first meeting of the year, with investors expecting the central bank to pause its rate-cutting cycle. George Concalves of MUFG writing the labour market remains a critical focus. We see the Fed cutting 3 to 4 times to neutral. George joins us now for more. George, good morning.
Good morning.
Where's neutral?
Neutral is really in the eye of the beholder. And I do think it depends. And it depends on if it's a politically motivated neutral versus like an economic neutral.
Now we're getting into it. Which one is it?
look, that's why I have 3 to 4. I have a range. I mean, I think two more cuts I think bring us to like a more equilibrium type rates of neutral, depending on the eye of like where you need to bring rates to anchor long-term rates, what you need to do to make housing more affordable. That's a different kind of neutral.
Well, what's the committee telling us right now?
I think the committee, like this week, it's the first meeting, first skip after cutting 3 times. They've done this now 2 years in a row. I don't think that they could afford to wait that long for the next cut. And of course, we're at the end of Powell's tenure.
Can't afford to wait, so you think potentially it's on the table for this week?
Oh, not for this week. So I think like look, having like 9-month gap last year of cutting in September allowed for the labor market to get even weaker, unnecessarily so. And as you recall from the Powell pivot in August from Jackson Hole all the way throughout the rationale for cutting to begin with in 2025, they pivoted towards the labor market. It's hard to pivot away from that unless you have really real evidence that the jobs market is accelerated. Meanwhile, there is a path. We still have a March cut, which is obviously out of consensus and not priced in. There's a path to cut if the February release of the January NFP and the revisions data really corroborates what Powell mentioned last year, that perhaps jobs data is overstated by 60,000 or more. And if that's true, if we hear those kind of tones this week, it'll be a dovish meeting, even though they won't cut.
It's going to be interesting because, of course, the politics is going to be center stage. When you say eye of the beholder for the neutral rate, what is the gap for the 4 candidates that may be the Fed chair in terms of neutral? Basically, Rick Rieder to Kevin Warsh.
I would say it's 50 basis points, about 50 bips. I think 2 cuts roughly. This is why I have that kind of range of 3 to 4 cuts. Fundamentally, 2 cuts are easily justified. Beyond that, you have to start to kind of factor in other drivers.
Isn't it odd we're having this conversation with GDP tracking at 3-4%, maybe more?
It is, but the idea of running an economy hot does require lower rates, and so this is part and parcel for the objective, which is to keep the economy on fire.
This was the Seth Capita point. It's odd that we're seeing this jobs dynamic at the same time we're seeing GDP like right up here. Does something have to give?
Well, I mean, ideally, it'd be great to see the jobs market catch up to the economy, right? But given all the other sort of new phenomenons like AI, companies holding back, you might end up with a situation where maybe productivity could fill that gap for a while. But at some point, GDP is coming down. So I'm much more bearish on the outlook. I think we're peaking in activity, and perhaps we peaked already in Q4.
When you look at what's expanding in GDP, it's things like AI and then also things like gambling. So how does this economy actually have GDP expansion where it requires more labor?
Right, and that's where I think the low rate story does play a role. The small to mid-sized companies, the housing sector, those are the areas that can, with lower rates, would move the needle and actually broaden out the recovery, not just to these kind of bipolar parts of the economy.
The Fed's been a snooze for the last month. So's the US bond market. Let's get to where the real fireworks have been, Japan.
Yeah.
JGB market. I've just been surprised by how insulated the global bond market has been from developments in Tokyo. How surprised are you?
Look, I've been surprised in my wildest dreams. I would never have thought we would have the rate moves that we've seen without some sort of impact on broader sentiment and also just outright losses somewhere, right, in the system. And so there clearly is kind of this kind of balancing act that's going on. But we did look, in all fairness, last week, 10-year rates did kind of gap higher in the Treasury side, right? So there was a small kind of viral infection back into the Treasury market.
Kind of for a moment, for a half second. But I want to build on the discussion that you and I are having right now. These are the kind of things that the bears dreamt about. The blow up in a JGB market, to the extent that it has blown up. The moves we've seen in the Chinese property market over the last several years. These are the things that the bears were warning about for years and years and years. They've happened. And I've just been struck by how insulated, how resilient the global market seems to be in the face of some of these issues. Does something have to give again, or is this just the way it is?
I mean, look, I think the excess liquidity still has been working through the system, and it's been looking always for the cheapest asset, and so perhaps it overlooks these sort of kind of isolated events, which aren't big in and of themselves. But valuations do speak for a stretched market in all asset classes. So, like, maybe the weakest link is not where we're looking. It's going to be somewhere else.
Where are you focused?
I still think it's the equity market. I mean, this is why the U.S. can never let equities go down. We're so linked to growth, driven by...
Can't let equities go down.
Yeah, so rates have to come down at some point.
When you look at the equity market, and do you think the bar is very high, though, for this earnings season? Cameron Dawson was talking about how the margin growth has to be 200 basis points.
Look, there's always going to be a moment where the reality is going to set in and earnings cannot actually meet the expectations. And maybe we're in the midst of that. And while you're in that transition period from high valuations, you're going to have to lean on the levers you have, which is going to be the lower rates, further fiscal spending. But we're not going to get that this year. Not justifiably so at the beginning of the year. So this is why I think rates are going to play a role in keeping equities propped up.
You're convinced the future Fed chair sees it the same way?
Whoever that may be, I think is going to have to argue with keeping the equity market, well positioned to continue to grow and perform. Look, these are we're now kind of veering off into the areas where you would think it's not like acceptable for U.S. capital markets or how the actual the way that the world works. But we now need lower cost of funding, higher P valuations, and that can't change.
George, how difficult is it going to be that new face of the Fed, though, to convince the committee?
Look, I think if it anchors back towards the fact that jobs have been lacking, and you need to have a broader growth environment, which helps out like companies in the last 2000. As like these small to mid-sized companies are the most sensitive to rates, so you can link back to like the wealth effect, the kind of broadening out of risk markets, broadening out of the economy. And I mean, it could be a stretch, and it might take a while, but I do think that they're gonna have to get multiple cuts in before the midterms.
George, good to see you. Appreciate your time. Thank you, sir. George Goncalves there of MUFG on the race for the Federal Reserve and the prospect of interest rate cuts before the midterm elections.
Yeah, and that's music to the ears of this White House. The problem is, can that new face of the Fed, if you're running on the Federal Reserve and think that they've had an overreach in terms of the independence, and we've talked about that galvanizing some of those members, can that new individual, whether it's Kevin Hassett, Kevin Morse, Rick Rieder, maybe Governor Waller, can it convince the rest of the committee to take those rate cuts before the election?
All these concerns, the US debt load, tariffs, inflation, the JGB market, Fed independence, 10s at 422. Up next on the programme, Evan Brown of UBS, Henrietta Trays of Vader Partners, Bloomberg's Craig Trudell, and the GM CEO, Mary Barra. All of that still to come. The second hour of Bloomberg surveillance just around the corner.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Thing here is understanding. These digital assets have the ability to change the payment landscape of the world. And we need to be ready. We, the regulators, the world needs to be ready for a new wave of technology.
Stablecoins are almost entirely used in the mechanisms of trading cryptocurrencies. What we saw is the opportunity for digital assets broadly, stablecoins in particular, to be used as a medium of exchange outside of the crypto world, what is today the fiat currency world. At some point, I think these digital asset wallets will be big enough and people will be comfortable enough using them. I think we'll have a flip from conventional payment mechanisms into stablecoin-based mechanisms.
Does that mean banks such as yourselves issuing stablecoins?
We could. We are issuing Hong Kong dollar stablecoins today. We're in a sandbox for tokenized bank deposits in Hong Kong. We're effectively issuing tokens related to trade finance in Singapore. So it's all on the table, but we're always going to tie it back to what our clients want and need. Because if we don't get that one right, the rest doesn't matter.
The market capitalization of both type of instruments, crypto and digital assets, are both very low. Stablecoins today have $20 billion of flows a day. It's less than 1% of the flows of the payment system in the world. But because they have the ability to be very helpful in use cases, particularly in retail to begin with, but then potentially on the wholesale side, I think we will see a lot more of them.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, Tuesdays only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Good morning, this is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is this tension that the spending data have been reasonably solid, but it's the employment data that have been soft.
Maybe that jobs market weakness is sort of starting to steady a little bit.
Inflation, while not at the Fed's target, has been heading in the right direction.
Cutting rates might be a little bit difficult to justify.
I hope the Fed stays on hold.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
The longest first month of the year ever. I think it's fair to say for 2026 so far. This is dragging on and on and on. I was just saying at the commercial break, it feels like the end of Q2. Never mind the end of January. Right from New York City this morning. Good morning to you all for our audience worldwide. The second hour of Bloomberg Savannah starts right now. Your price action looks like this. Equity futures on the S&P up by about a third of 1%. On the Nasdaq up by 0.7. Through the close yesterday, within striking distance of all-time highs, within a half of 1% of a record on the S&P 500. Big week still to come. Tons of tech earnings just around the corner. A big 48 hours for big tech. We will get numbers from Meta and Microsoft. Apple coming on Thursday, and a Fed decision in the mix just around the corner.
And the Fed decision is going to be really interesting. We're just talking to George there, who says they're going to have to cut before the midterm elections. He has an out of consensus view that maybe March is going to be on the table. No one thinks they're going to cut this week, but this week is going to be important to understand where the Fed is really emphasizing their mandate right now. Is it still concerned about the labor market, and also the politics surrounding Jay Powell is going to be center stage, or what do you say, pay-per-view?
Box office, pay-per-view, I mean, take your pick. Look, the chairman has backed off from engaging in this subject for the best part of 12 months until recently, where he became more assertive, I would say maybe even more aggressive. Is he going to take that posture into the news conference tomorrow?
I was talking to Mike McKee about this before the show. He was walking in with his luggage because, of course, he'll be going down there. Flights operating, of course, so the Fed getting back to business in D.C. The issue is, to your point, he's ignored it for months. The problem is now he has, in the administration's eyes, made it political by showing up to the Supreme Court hearing for Lisa Cook. And he might flirt with the idea of saying something more than just no, or I refer you to the Justice Department, I refer you to the White House on these questions. He might flirt with it a little bit more, but to Mike's point, he doesn't want it to dominate the entire conference. So a little bit of a balance he's going to have to strike.
Mike McKee, of course, will ask those questions in the news conference, no doubt, tomorrow afternoon. If you're just joining us, equity futures positive by about 0.3% on the S&P 500. Coming up this hour, we'll catch up with Evan Brown of UBS as equities build on a 4-day winning streak, Henrietta Trays of Veda Partners as a government shutdown deadline looms, and the GM boss, Mary Barra, is going to join us as the carmaker reports and earnings beat. We'll begin this hour with stocks edging higher as the Fed's 2-day meeting begins. Evan Brown of UBS writing, risk the consensus growth forecasts are skewed to the upside. Solid growth with contained inflation favours equities and credit. Evan joins us now for more. Evan, good morning.
Good morning.
Let's take the first line first. Skewed to the upside, why?
Well, we've got the fiscal support coming through, over $100 billion that's going to hit the consumers' wallets here in the U.S. We have also a positive fiscal impulse in Germany and Japan, and so all of that together is pretty supportive of growth in the first half.
Better growth, contained inflation.
Yes.
How does one not lead to an inflation boost?
Yeah, so we have this downtrend in shelter, which is a huge part of inflation. We also have wages, which are also weighing on inflation. I do think, we've had this disconnect, we're all talking about it, between growth and the labor market. Maybe there's an AI story there, maybe it's just general business caution, but the reality is that the labor market is not tight, and so you're not going to get this immediate acceleration in wages that's going to increase domestically generated inflation.
Does that give this Fed even more space to reduce interest rates?
It does, in our view.
Fuck.
I mean, we think that the Fed can cut rates a few times this year. It's going to become clearer and clearer as the tariff effects come out of inflation that they'll see enough there to cut rates.
When it comes to the labor market, though, if part of it is AI induced, how does a Fed rate cut solve that?
I don't know if the Fed really needs to solve that. I mean, there are certain areas of the economy that remain weak, like the housing market, and hopefully Fed rate cuts can provide some support there. But I think in general, for the kind of the areas of the economy that are weakening because interest rates have been too high, the Fed will help. I don't think it's going to do much in terms of the AI front either way.
How concerned are you mentioned tariffs before this, about the impact just happening now? You had the Amazon CEO last week talking about he's starting to see the creepiness of tariffs come in. They're creeping into some of the price levels that they weren't happening last year.
Yeah, so we are going to see a little bit more of a push through in goods inflation from the tariffs, but what we take a lot of signal in is 1 year inflation swaps, essentially what the market is thinking inflation is going to be a year from now. And those are absolutely collapsing. So there may be these temporary effects from goods prices going higher because of the tariffs, but once that washes out, you've got these domestic effects that are putting downward pressure on inflation.
Let's turn to the market moves. Gold's ripping. The dollar's selling off. We saw a bit of this last year. We're seeing it again at the start of this year. What do you think is the dominant driver behind that move?
Yeah, I think in general there's a few things. One is that there's growing concern about fiscal deficits, not just here, but in Japan and in other places. In gold, I mean, we have seen a surge in geopolitical volatility, and so there's this knee-jerk move into gold as well. For the broad dollar, yes, we're beginning to see some weakness this year, and I think that some of that is related to the Treasury via the Fed checking rates on Friday and essentially sending a message. We want to limit dollar strength from here. As much as we see the U.S. economy accelerating, we don't want to see the dollar going with it.
So last year, when we saw this big bout of dollar weakness, it was accompanied with rest of the world equity outperformance. Do you see it the same way this year?
Yeah, I think combined, we do see further dollar depreciation over the course of the year, and the Treasury stance on the dollar is an element there, as well as interest rates coming down relatively more in the U.S. than elsewhere. But I also just think that the U.S. equities in general, we're having to be a little bit more selective, right? It's no longer this one big AI trade that's driving the index. There's a lot more differentiation in that space. Whereas globally, you see some really powerful themes, whether it's high bandwidth memory in Korea, or just the broader reflation trade in Japan, or defense and industrials and banks in Europe. So all of these themes, I think, are going to attract capital over the course of the year.
When it comes to the idea of the sell America trade, is it just sell the dollar but still make sure you're exposed to the equity market?
Yeah, it's interesting because we have a lot of conversations with large global allocators, and they're not saying, hey, we want to sell our underlying U.S. assets. They're not saying, hey, we want less exposure to U.S. equities. But what they are saying is, hey, we built up a lot of dollar exposure. We see that the administration is looking to get a weaker dollar, and maybe we should be hedging a little bit more of this exposure.
So when they hedge that exposure, where exactly are they looking to?
So in general, they're just selling dollars forward and buying back their own currencies, essentially. And so again, no reallocation out of U.S. equities, but selling the dollar to hedge that flow.
You mentioned South Korea. Move on to Kospi so far. I think here today we're up by 20%.
Yes.
Best performing currency in G10 this year, the Aussie dollar. The moves you're starting to see now, copper exploding as well over the last several months, base metals. If you just showed me that and didn't tell me anything about the news flow, I'd be like, well, Evan, this is just telling me we're going to see a massive, massive pickup in global growth. Is that what that is? And do you expect to see that?
I think it's two things. One, a cyclical acceleration, some pickup in global demand driven by fiscal policy. But I think there's another element here, which is a strategic move of the U.S., China, and other countries to really build up minerals. That there's this kind of strategic de-risking
Like
from
an arms
various-
race.
Yeah, essentially, with China weaponizing rare earths, the U.S. and other countries realizing, hey, we need to make sure that we have these materials, copper and such that our supply chains are in good shape. And so that global stockpiling and that global investment, I think, is supporting the metals and supporting countries like Australia that really export these
Do
materials.
you see all of this as a multi-year secular force that you just have to get behind? And to what extent should I just ignore traditional macro indicators like GDP, payrolls growth, when this is where things are heading? This is where governments and policymakers are pushing.
Yeah, I mean, I don't think you ignore the cyclical impulse. Like, if we were to have a recession, then these metals are going to take a hit. But I do think that there is going to be this strategic underpinning driven by geopolitical themes that is going to support these metals and these critical minerals going forward.
Are you spending more time talking about that than, say, the unemployment rate in America at the moment?
Yeah, I mean, we remain focused on the labor markets. It's key ultimately to what the Fed does and everything. But ultimately, I think you want to take these signals from the markets seriously. And when you see the kind of moves that we're seeing in copper or in the companies that are refining and exporting rare earths, like, that's something to pay attention to.
You certainly take note. Evan, it's good to see you.
Good to
Thank
see
you,
you,
sir.
Dan.
Evan Brown of UBS. Tariff threats on South Korea. The Kospi's up this year by more than 20%.
Well, I think a lot of people are just looking through and thinking this is going to get Trump will chicken out or force the South Koreans to just expedite this investment deal they have with the United States. But to his point about what's going on with China, this administration couldn't have been clearer. Whether it's taking equity stakes in companies or whether it's talking about places like Greenland, it's the critical minerals they want access to and then the ability to process them right here in the United States.
Equity futures this morning positive by about 0.25% on the S&P with an update on stories worldwide with your Bloomberg brief. Joining us now is Yahara Anand. Hey, Yahara.
Hi, John. Airlines in focus this morning as earnings season rolls on. American Airlines shares up 2.2% after missing on fourth quarter results and posting weaker than expected EPS guidance for the full year. Meanwhile, JetBlue shares are falling 4% after reporting wider than expected losses per share for the fourth quarter. Meanwhile, the European Union and India concluded a free trade agreement after almost 2 decades of negotiations. It's part of an effort to deepen economic ties ramped up by aggressive tariff policies of the Trump administration. The deal includes reducing tariffs on imports of EU-made cars to 10% from as high as 110%. And here, the largest U.S. grid operator has been granted authority to divert power destined for data centers to households, hospitals, and other customers. The move aims to prevent rolling blackouts as an extreme cold snap strains electricity supplies. The order was authorized by U.S. Energy Secretary Chris Wright on Monday. That's your Bloomberg brief. John?
Yahara, thank you. More from Yahara later this hour. Up next on the program, working to avoid a shutdown.
The White House supports the bipartisan work that was done to advance the bipartisan appropriations package. We absolutely do not want to see that funding lapse, and we want the Senate to move forward with passing the bipartisan appropriations package that was negotiated on a bipartisan basis.
Up next on the program, Henrietta Trays of Veda Partners live from New York City this morning. Good morning.